Would be really an interesting session, and maybe I am sure that Kunte sir will also would like to have it as an interactive session. So if people could come ahead and occupy the front seats would be better. So welcome all for this second last session on the National Conference on Statutory Audit of Bank Branches. Our next topic is auditing around the computer, and for the same we have with us CA Kiran Kunte sir to share his practical knowledge. Well, before I read out his brief introduction, I would request my colleague CA Ajinkya Randive to felicitate sir. Thank you, Ajinkya. CA Kiran Kunte. By qualification, he is a BCom, LLB, a qualified chartered accountant, obviously by default, a DISA, certified IFRS from ICAI, and he is also a qualified insolvency professional. He is practicing with KG Kunte and Associates. He is engaged in regular professional service. He is engaged in regular professional services like audit and assurance, tax and regulatory compliances, concurrent audits of bank, EDP system audits of bank, financial consulting, consulting on legal aspects of business. He has been a regular faculty at Symbiosis and has been delivering lectures, I think once in a week, sir, right, at Symbiosis College, yes. And he has delivered various lectures in various study circles across Maharashtra. So with this brief introduction, I would request Kunte sir to take the charge of the session. Over to you, sir.
Good afternoon, all of you, and at the outset, let me express my sincere thanks to Pune ICAI office bearers for giving me an opportunity to share my experience from this dais, and that too in front of all the learned members in the audience. Normally, we run our ICAI motto song in the morning session. That's a custom and tradition. But the importance of that is felt more in the post-lunch session, especially because our motto song includes one famous quotation from Upanishada, Ya Isha Supteshu Jagruti, which describes chartered accountant as a person who is awake when all others are asleep. In post-lunch session, if we all are chartered accountants, it becomes our duty to remain in awake mode and not in the sleep mode, because I'm aware that it's quite difficult to remain in active mode, especially in the post-lunch session and after having a sumptuous sweet dish. Yes, so especially it becomes difficult, but anyway, we have to move on, and so that is why, considering the fact that I am addressing a post-lunch session, plus this is second last session, we are at the fag end of this national conference, I have ensured that the speech doesn't become a pure academic lecture. Since everybody in the audience is a qualified chartered accountant, we will not discuss the basics of banking, nor will discuss the basics of auditing. We will be talking about the practical aspects and tips or hands-on suggestions in today's scenario. The name of the topic itself is, I am talking more about an approach. It's auditing around the computer. What I have been mentioning is that it's an approach for bank audit which is in the CBS environment. Many years back, the concept itself was CBS was quite unknown to us. Now we have passed that phase. Now everybody knows that it is much more wider and extensive than mere any branch banking. But yet we need to understand this entity and environment. I would first be talking about why I have selected this topic, which apparently is vague in description, around the computer. There are two approaches for any bank audit. One is audit with the computer, and second approach is auditing around the computer. Now, with the computer, to be very frank, is outside our technical domain. Look at our day-to-day practice. We sign tally-generated balance sheet because we know tally. But of course, we are not aware of the programming language, platform, etc. of tally. We know the functionality, that's it. There are a few other accounting softwares also, but as far as banks are concerned, we are not permitted to use CAAT, means computer assisted audit tools. At the same time, since our laptop or our machine doesn't have banking software, we cannot download their data. Nor the pen drive is allowed in banking business. As per cyber security principle, most of the nationalized banks, almost all the nationalized banks, they fall in the level 4 category of, which is mentioned in the comprehensive cyber security circular of RBI dated 31st December 2019. Accordingly, the USB ports of most of the computers, they are not in the enabled mode. It is about secrecy. So because of those practical difficulties, when we cannot follow auditing with computer, there is only one option. What remains is auditing around the computer. Now, as far as this auditing around the computer is concerned, basically we need a paradigm shift in our approach. Why this shift is essential? Because the typicality of any virtual environment is that the impact or consequences of loss can be felt, and the tremors can be felt only after it has happened. Look at the classical example of PNB. What that person did with the non-fund letter of comforts, we know. And the amount was of such a magnitude that it was not possible for anyone to absorb the losses. At the same time, I am aware that we are not talking about IS audit, we are not talking about EDP audit, we are not talking about information system audit. I would be concentrating and localizing my discussion with respect to the practical approach, what we have to take with respect to the bank audit. So major shift, when we talk about shift in the audit approach, yet we need to go to some topics which we have studied only in the student level and probably might not have handled to that level in day-to-day practice. Most of our day-to-day practice, it centers around substantive testing, which is a functional testing. It is a transaction audit. Typical bricks and mortar model. Vouchers, some green ticks, here one tick there, we get some satisfaction. Now this green ticking, it's only an academic satisfaction. It doesn't give you any assurance. If your own audit doesn't give you any assurance, on what basis you can give assurance to other stakeholders? Unless until you yourself are satisfied with the transaction processing, it is not correct on your part to have any attest function or assurance function. So traditional practice, even in bank audit, it centers around substantive testing. Yes, when we have our manpower planning, some senior staff members, say retired bank employees, they are fit for substantive testing, not for compliance. Because person in the substantive testing, he will find out all the documents, he will find out all the methodologies, might be traditional methodology, but he will verify that, a senior person. But today this is not sufficient. I am coming back to that once again. I want to overemphasize the importance of compliance testing, because unless and until you ensure that the adequate controls are in place. See, compliance testing is a non-functional testing. It is a test of whether there are controls which are documented. If those controls are documented, whether they are in place, and if they are in place, are they effective? All three matters are important. Compliance testing, it talks about those three things. So when I say that we need to change the approach of bank audit, the first shift in the approach is that you have to allocate manpower based upon, to be very frank, age group. Senior persons for substantive testing, traditional vouch and post, verification of documents, verification of loan bonds, etc., etc. And as far as compliance testing is concerned, yes, it should be allocated to at least some person who has got some literacy in computer. I am saying some literacy. We are not expected to be a very good technocrat. Because after some time, I would be giving a theoretical definition of auditing around the computer. Because that approach is very much needed. And why that approach is needed, there is a legal background to it. I refer about section 143(9) of Companies Act, section 143. Generally, we read about this section under Income Tax Act too much. But this section under Companies Act is of utmost importance to all of us, just that this section talks about auditing standards. And Companies Act 2013, for the first time introduced this kind of section, which was not there under Companies Act 1956. According to this section, every auditor shall, underline, shall, it's not may, every auditor shall comply with the auditing standards. All of us know that banks are also companies to the extent their provisions are not inconsistent with Banking Regulation Act. Banks are companies. Their shares are listed on stock exchange. So all those auditing standards which are applicable for corporate audits, yes, they are applicable to banking audits also. So first and primary auditing standard which we must note, I know that I am slightly discussing about law, but that is absolutely fundamental, because the implications of an auditor failing in his duties, they are enormous. And especially when somebody can establish that the concerned auditor has not even complied with his own auditing standards, then of course the gross negligence is evident. There is no line of defense. One of the auditing standards, I can't recollect the name of that auditing standard, but that auditing standard is, yes, identifying and assessing the risk of making a material misstatement. See, this risk is with the auditors. If you fail to understand the entity and the environment, then of course your entire audit function itself was without due quality. Because even when we open an account with bank, there is KYC. A couple of days back, ICAI has also come out with something called as a unique membership. I'm not commenting on that, but there is some exercise going on. UMIM, MIM or UMIM, jo bhi hai. जो भी है वो exercise. But KYC also stands for know your client. Now somebody will say that we know this entity is banking. Okay, all right. But every branch has a different profile. Some banks are deposit oriented. In that case, your audit program might undergo substantial change. Some branches are advances oriented. Your program will change. Some branches are service branches. Of course, I am not covering that area. Some branches are special purpose recovery branches, where the audit focus would be different. But at least, see, many times what happens is that person asks exactly what is to be done when we go for bank audit. How do we start? How do we commence the bank audit? First thing is that at least spend half an hour with the trial balance and find out the profile of the branch. Then you can find out exactly what is your preference. You will understand the entity. Even for this ATM, many times we are not aware that the ATM which is in the vicinity of the branch is not under the control of that branch. That area is already outsourced and that balance gets merged with somebody else. I know this about IDBI to a large extent. But at least identify your entity, assess your entity, and then we talk about the environment. Now, what is CBS environment? Yes. While we talk about this environment, I have given a verbatim from the concerned auditing standard. Once again I say, observance of auditing standard is mandatory. And as far as this auditing standard is concerned, look at the language. Auditor shall, once again I am saying shall, obtain an understanding of the information system. You can go through that. Of course, you are free to interrupt me in between. Because instead of monologue, better it can be a dialogue. We have to understand the business process. We have to understand the information technology. We have to understand the method by which a transaction gets originated. I will come back to that. We have to understand the business process, technology, how a transactions get initiated, how it gets processed, what is the output, and what gets reported finally. Because what we sign is an output. Generally, we believe that any computerized printout has to be correct. But once again, I am coming to the same point of GIGO principle, which is abbreviation of garbage in, garbage out. If the input is garbage, the output has to be garbage. There is no other way. If the input which has gone into the system itself is incorrect, of course we'll find out so many examples. If the input which has gone to system itself is wrong, output has to be wrong. Now, without understanding the environment and the system, without understanding this path, there is no point in saying that this output was generated by Finacle, it was generated by TCS, it has to be correct. No way. Simply because it is generated by Finacle, it will not be correct. I don't want to name a company, but the CEO of that company, CEO of that bank which was using Finacle, she has to resign because after every 5 minutes, Finacle was showing a different NPA report. Yes. So, when we talk about garbage in and garbage out, we need to understand what kind of basic shift we are making in our approach, that our entire concentration first should be on input and then on output. Don't concentrate, don't begin your audit with output, commence your audit with input, then process. I was talking about a transaction, how a transaction is initiated. There are two types of transactions. One is customer-induced transaction, especially in Finacle, this is the concept. One is bank-induced, another is customer-induced transaction. Some of the bank-induced transactions we will see at the end of session. Customer-induced means customer has done this transaction on his own. Suppose he has come to branch and deposited some cash, it is induced by customer. But the levy of service charges, which has been automatically debited by the bank at the day end, is a bank-induced transaction. Submission of stock statement is a customer-induced transaction, but calculation of DP is a bank-induced transaction. So, at least we should have a preliminary sense of which transactions are customer-induced and which transactions are bank-induced. At least we should have that much. And for that purpose, a very simple discussion can start with the branch manager. What is the level of computerization? I remember there was a age-old Baba Adam model of LFAR 3 years back. Age-old. It was unmoved for 25 years. That had a reference of some travelers' checks, etc., age-old questions. I am coming to LFR as far as technology is concerned. In LFR, there is a question, what is the level of computerization? Now, simply if you say 100%, that would be a wrong answer. Because the moment you say 100% computerized, means you are solely rely on the output generated by the system. Interest application I can understand, it is 100% computerized. What about processing fees? I have not seen anywhere processing fees. The banking software captures it from any table. They are debited manually. Locker rent. Most of the cases, since there is no certainty of recovery, it is not automated. Interest subvention. Most of the cases, it is not automated. Stock audit fees and other charges which are collected from borrowers, collected manually, debited manually. So, even bank guarantee commission, it is not automated. So, instead of saying 100% computerized, you can at least specify after having a discussion with the branch manager that following areas are outside the scope of automation. Interest application, I know it is automated. What about NPA? What answer you will write? I am asking this question. Many will say it is automated. As per RBI circular, which talks about system-based asset classification. In one of the seminars, this topic must have been already handled. Of course, they must have addressed IRAC and provisioning norms, etc. I would be talking about technical part of it, because finally we are signing that. System-based asset classification, there are a couple of points, technical points, which I will first narrate. According to this circular, what is expected is that the asset classification, technology-wise, it is a mere straight-through process, STP. Straight-through process means everything would be handled by the system. You must be aware with a concept called as a straight-through process, especially in ROC compliance, certain documents, they get approved on STP basis. Certain documents need manual intervention, somebody's attention, ROC, etc. System-based asset classification is expected to be a straight-through process. But in reality, it's not 100% STP in any bank. Any bank, I am saying, without exception. Then, in specific circumstances, even the circular also allows the manual intervention. It is expected that the bank has a board approved manual intervention policy. Now practical difficulty for a local branch auditor, interaction between a branch auditor like us and a small branch manager, and we are talking about documentation of their board meetings. We will get nothing. He is also not aware. In that case, it becomes a good case for you. Get this written or certified from him in MRL. The importance of management representation letter in the CBS environment is enormous, because only that will insulate you and shield you. Your lack of knowledge will not protect you, but if you have taken reasonable care and if that is addressed in MRL, that can protect you. Branch manager is definitely aware what are those manual cases in which there is a manual interruption and manual intervention he has done. Get a commitment from him that he has not done any manual intervention, or in case of an NPA, ensure that every marking and unmarking has a maker and checker. I will come back to this once again about system-based asset classification. NPA nowadays is marked on daily basis. It is an ongoing. Every day it happens. So a particular account gets downgraded and upgraded n number of times, even in a month. Twice it will get downgraded, again upgraded, again downgraded. It happens. Check one particular account. Now, how to select that account, I will come back to that later on. Find out an account which has constantly seen ups and downs. On one day it was downgraded, then there was some recovery, it got upgraded, and so on. Ensure that there is a maker-checker audit log available for each of these moments. If you don't find it, write somewhere in the audit report, at least in the form of emphasis matter. Because it may not affect true and fair nature. But somewhere include that. Because even LFR gives you an option whether you want to say anything else, last, any other. You have got ample space to write anything over there. So about system-based asset classification, first change is that it's ongoing. System will have maker checker. Just find out that. एक दो account तो देख लो आप. Second is, there is a fundamental clarification issued by RBI with respect to the concept of out of order, which has direct bearing on system-based asset classification. I am talking about especially cash credit account, where on any day, once again I am saying, since this is an ongoing activity, on any day the interest applied on that account should be fully serviced. Even if the shortfall is ₹2, that account will get caught as NPA. Even if the shortfall is ₹2, I am saying, the account will get classified. How to catch hold of those accounts, I will come back to that later on. But this is how a fundamental change in the approach is needed. You have also to ensure that the processes are followed correctly. Cases of manual intervention, I will give you classical examples, because those exceptions are mentioned in board approved policies of so many banks. Many times a particular account is considered as a standard by the system because there is a recovery flow. But because of inherent weakness, many times the RBI regulator or their inspectors, they downgrade that account. Despite of the fact that there is a recovery flow, constant recovery flow, and for all the purposes as far as the recovery front is concerned, those accounts are standard accounts, regulator downgrades them. Because they say that this recovery is not from the genuine sources, or it was only a round tripping accounts, etc. But if a particular account is downgraded by the regulator, you have to downgrade that. And for this downgrading, there is a manual intervention. Even for this manual intervention, there has to be an audit log. You will find such cases in every branch, let me tell you. So do one thing. For a particular account, which has constantly seen so many changes, downgrade, upgrade, find out who has upgraded that. Importance, see, concentration is not on who has downgraded it. Find out who has upgraded that and why. One more case of manual intervention, and typically I want to highlight that. You will have to find out those details with the discussion from the branch manager, and for that purpose, you need a balancing of various loan products, what we call as a jotting report, balancing of various loan products. Get that with you. That gets downloaded on any software, which gets exported to Excel. You can store that with you. In case of project term loans, there is a concept. See, there are two types. One is infrastructural finance and other finance. There is a concept of commencement of commercial operations, long-term projects. Now, what happens if there is a delay in commencement of commercial operations? The initial date of commencement of commercial operations is mentioned in the appraisal note, which has to be fed to CBS system, let me tell you. Now, what happens if the project is actually not started and if the project is delayed, then as per IRAC norm, even if the recovery is smooth, even if the recovery is coming, that account has to be downgraded. Now, system will not take care of this, where manual intervention is necessary. So, even when you are studying the NPA statement of that branch, find out the date which is called as the NPA date. About maker checker, yes, about the maker checker, that is absolutely needed. You can find out. Now, how to find out that? Once again, I am saying. The transaction will have audit trail of maker and checker. Normally what will happen is that in case of a branch, either the name of the person who initiated the day-end activity of that branch will appear as maker, because he has initiated the day-end activity. NPA classification takes place immediately on the day-end activity, and it takes place including the day on which the interest is actually applied. Those are few clarifications with respect to the definitions of out of order recently given by RBI. So, coming back to the fundamental change in the approach, what I have been saying, auditing around the computer, I will come back to the definition later on, but again, an academic source for which I am saying that we need a different approach in the audit is the language of LFAR, and look at the guiding principle. Look at that language. They start with data integrity. New language of LFAR. Earlier, our Ghosh committee, Jirani committee, many of the questions were pertaining to integrity of staff. Now we are talking about data integrity. Now, what we mean by data integrity, that we need to understand, and then the entire matter would become clear why we are talking so much about the technological aspect in the auditing. Data integrity is a very simple thing. It's a validation of input. It is a validation of input control. What goes to the system? Process control. What is the process which concludes a transaction for the reporting purpose? Input control, process control, interface control. Now, interface is a communication between two modules of that CBS. Interface control, for example, a locker module may have an interface with the revenue model. The moment locker is allotted, I can have entry for the revenue recognition. It's an example. Input control, process control, interface control, and then finally output. Unless and until you have the satisfaction about the validation of input control, output control, process control, interface control and output control, you cannot say that the data integrity is mentioned, is ensured. Typical questions in LFR, typical questions. Question number 5. Furnish your comments on data integrity, including data entry and its authorization. This is a specific question which we have to answer. Normal problem with LFAR is very horrible. We perform all other audits, and once everything is done, as a time pass activity, we'll start with LFAR. Because last 10 number of years, the importance of LFAR has been diminished. There are different background for that. But look at this. Specific question, whether there are any software system otherwise used at branch and which are not integrated with CBS, if yes. Few years back, with most of the banks, even with Bank of Maharashtra, there was a software called as the CREAM. CREAM was being used for identifying NPA, and that was being integrated with CBS later on. There was enough room to play around in this CREAM. Now what RBI has done is that you cannot have any other tool, any other software. Whatever has to be there, it should be within the CBS. But this question they have asked to auditors. We have to answer it categorically. So the practical suggestion is that if you cannot find it out, better way you get it certified from branch manager and it should be included in MRL. This is a practical suggestion. Because otherwise somebody will ask how to find out whether they have got any other software for this. As far as the tracking and monitoring of locker overdue are concerned, most of the branches, they are maintaining a parallel record on Excel. Of course, that doesn't have interface with CBS, but we can make a passing reference that those records are maintained on Excel. Even some old staff about to retire in various banks, somehow still they maintain a bank guarantee register which is not even legible. N number of rounds are there, extended, cancelled, again. We cannot find out anything from that. Now, manual bank guarantee register is not forming part of books and accounts. Don't verify that. Even if that is produced, don't verify that. BG register is available in Finacle and even in TCS. I will give you the ready-made menu for that. See, most of the part of my speech, something about philosophical, why we need change in the approach, and most of the presentation is only informative. I have spent most of the PPT for quoting actual commands from Finacle and TCS, which you can use as a hotkeys for doing audit. I have included that, ready-made. Exceptional transaction report, I will come back to that once again later on, because I have to discuss about CBS environment, exactly CBS environment, what does it include and how we can make best use of it. So exceptional report as well as its path, I will give later on, both from Finacle as well as from BNC 24 TCS. Whether the bank has laid down any procedures for manual intervention to system generated data and whether there is a proper authentication mechanism in place. Yes, I can tell you, for especially a particular branch which has given a finance where the DCCO concept is applicable, delay in commencement of commercial operation, there would be manual intervention with the approval of HO. Find out all kind of documentation, who has authorized that. In between, if you have any question, please ask me. because, okay, specific questions from LFAR that indicates the importance of garbage in, garbage out. It's a specific question whether applicable interest rate is correctly entered into. So the change in approach basically centers around that we have to master the master. Every customer has a master, fundamental information. I have prepared a template on and sort of it is an example of illustration of how a master data is fed to the CBS. What are the parameters? Now interest rate, if that interest rate itself is wrong, the revenue generated has to be less or excess. Test checking of interest revealed excess short credit of material amount. Now this depends not on your physical calculations. The moment you ensure that the interest rates are correctly applied, practically your work is over. 90% is compliance testing, 10% is substantive. 4 account dekh lo, from, you can see 10 accounts from each product. And very few accounts with manual checking. It's a great problem because if you depute this kind of articles to bank audit, they can't even calculate monthly interest. This is the problem. They can't calculate it. So whatever has to be done, we have to do it. You can't expect anything from them. What we can do is that based on our experience is that let's concentrate on compliance testing. This is compliance testing. This is non-functional. Whether the interest rates are fed correctly, whether they get upgraded correctly. What are the circumstances in which the interest rate gets updated? Many times the interest rate depends upon the credit rating given by the bank. More is the credit rating, less is the interest rate. So it is always +1, +2, +3, +4, etc. If this pattern itself is not correctly entered into the system, the income generation output has to be wrong. This concept is called as a rate pattern. Let me give you some specific example about a huge revenue leakage which was detected by me in some bank. It was only because of the verification of the master. And the classical example is temporary overdraft. Let me give you a very simple example. Of course, when we are going for a bank audit, we should verify a couple of cases with this angle. Even if it is a settled TOD, we should check that. Normally what happens is that if the TOD has become 0, we don't provide attention, but do that also. Suppose if the original sanction limit is 5 crores and TOD is 10%, means 50 lakh. So as per sanction code, as per sanction terms, the first pattern, of course it is example purpose, from 0 to 5 crore, 10%. From 0 to 5 crore, it is 10%, and 5 crore 1 to 9999, 13%. I mean to say 3% on additional. If this rate is not correctly fed, the revenue generation has to be wrong. So some staff you can depute for finding out TOD application, TOD documentation, TOD approval, but one staff should be devoted for this aspect also. This is what I mean to say when I talk about change in the approach. I have simply given the list of various softwares which we know. This is in the public domain, but I want to talk something different on this, on the very slide, so that I can elaborate this fundamental concept of auditing around the computer. Bank of Baroda uses Finacle. Union Bank of India uses Finacle. Canara Bank uses iFlex. State Bank, Bank of Maharashtra, TCS, BNC 24. But I have intentionally highlighted Bank of Baroda. Why change in approach is specifically needed? Because let me tell you, We have been allotted bank branch audit by Bank of Baroda, and very innocently we are going to Bank of Baroda branch. But probably we do not know that 30% of the data of this branch pertains to old Dena Bank. In few cases, 40% from old Vijaya Bank, and very few percentage from original Bank of Baroda. Now here our audit approach has to change totally. Yes, we are appointed as auditor of Bank of Baroda, but we need to see the data, what is there inside. If 30% data is of Vijaya Bank, 20% of Dena Bank, and 50% of original Bank of Baroda. Let me tell you, the branch manager has got control over only 50% of his original data. Rest of the things he will say that I am not aware, those banks merged with us. In that case, see, we are signing the balance sheet of this 100% data, out of which most of the legacy backlog data is of Vijaya Bank and Dena Bank. In that case, the change of approach will necessitate and educate us to talk to branch manager and ask in clear and loud terms I am saying. Even if you sound arrogant, doesn't matter. Ask for the migration report of that branch. The migration report was effective as on the date when the data of Vijaya Bank got merged with Bank of Baroda, or the data of Dena Bank got merged with this data. Because if I get a garbage in succession, entire further data has to be garbage. Because I will decide the asset category of an NPA as far as Bank of Baroda is concerned based on the NPA date which got migrated from Vijaya Bank. If that itself is a wrong, then entire asset classification has to be wrong. Ask for migration report. Normally we are afraid of asking, because the moment what happens is that the moment we go to bank, he will put his standard comment, I think which has been circulated to the branch managers of all national staff. ये लास्ट वाले 3 दिन में उन्होंने खत्म कर दिया. He will tell this first to us. 3 दिन में हो गया उनका. Let him complete in 3 minutes or 3 hours also, no problem. You should give me migration letter, that's it, migration audit. If not, I will say, mention somewhere that this was not made available to me. And by the way, try to find out this data also. From the entire loan balancing report, you will have some accounts from old bank. Try to find out, at least, now here some part is substantive testing, find out that data which Bank of Baroda has inherited from other banks. Same thing about Canara Bank. Canara Bank nowadays has a huge data of syndicate bank. What mischiefs bank have done, I am underlying mischief, I know. This is an unparliamentary language. But the mischiefs which I have seen is that in case of this migration, if a particular account was in the D3 category of syndicate bank, then at the time of migration, it might be just simply migrated as D1. Yes, with the connivance also. I don't have a very good opinion about migration audits that have taken place elsewhere. UWB, United Western Satara, prominent bank. It got merged with IDBI. After 9 years of this merger, we could find out some entries in a very large branch of IDBI, which was migrated as it is from the United Western Bank. And that was horrible entries. There was MOC of 30 crores after 9 years after integration and migration. I had suggested this MOC. It was an LC devolved, which was not even correctly migrated. It was hurriedly concluded migration. So if we are appointed as an auditor, especially of Canara Bank, Bank of Baroda and Union Bank, I think they have got Corporation Bank with them. Andhra Bank and Corporation Bank. Now we do not know what they have inherited. So that is why when I talk about change in the approach of CBSE environment, this itself is also necessary. Normally, when we typically talk about any academic circular of RBI or typical bank branch audit, we will not discuss this. But migration is a concept which has to be attended to. And okay, very good point. Let me tell you one more area which matters us a lot. Suppose if a customer is having a multiple banking, he was with Syndicate Bank earlier, he was also customer of Canara Bank. Now he was a standard customer for Canara. Let's assume. He was a standard customer for Canara, but substandard for Syndicate. Now the moment he comes, the entire portfolio becomes substandard. Many banks have conveniently given a different ID for that exposure and created a different account. I can guarantee that. Because Canara Bank person will say that anyway I am getting this as a legacy, why I should carry this bogey? Summary is that you should ask for migration report. If he says that it's not available, write somewhere in the audit report that those are the limitations. I am not aware what has been migrated over there. I am not aware of the data purity of what has been migrated. So first, now before proceeding further with this auditing around the computer, because most of the part later on is absolutely informative, I have just simply included the practical tips which one should implement while going to the audit. They are not even academic, they are practical tips. So before proceeding further, let me explain the concept of auditing around the computer. Let me ensure that nothing is left out. Okay, all right, nothing is left out. First thing about auditing around the computer is that we need not know anything, we need not know the technicalities of that particular system, whether they are using Oracle, Java, we are not supposed to know. Even when we upload income tax return, we know nothing about JSON, but we upload that. It's like that. Without knowing the technicalities, auditor need not know any technicalities or code, etc. But there is a general perception that the software reliability is already tested. I am saying because even with Tally, there is a perception that this output is reliable. Of course, based on your input. Auditor is not given access to the desired level in any banks. We know that. We are given only view facility, read only facility. We cannot initiate a transaction, we cannot authorize a transaction, we cannot alter a transaction, we can view that. So those are practicalities of auditing around the computer, that we are not supposed to know the technicalities at the back end, but the output reliability is generally known and tested by another person. The access is not to the desired level, but and where auditing with computer is not possible, we have to make best use of what is made available by the existing system. That is auditing around the computer. We have to make best use of that, what is made available by the existing CBS system. Now I am coming to what is made available. Let it be Finacle or TCS. Those three things are available. One is, let it be any software, there is a menu-driven report, which can be generated by anyone. It doesn't take processing time. Anytime it can be, it's a menu-driven. We can take it anytime. Exception report is a day-end activity. if you go through the guidance note on bank audit, you will understand that generation of exceptional transaction report is a compulsory day-end activity to be initiated by a branch, and they are expected to download that or even take printout and sign it. At least for the month of March, let me tell you, a practical suggestion, find out daily scroll and supplementary from your first various menu driven report. Daily scroll, day book, which talks about so many debit credit entries, and exceptional transaction reports. Because of course, at some point of time, I have given path also for that. But what we can find out from those year-end, those entries which take place either bank-induced or at the instance of bank customer-induced entries. I mentioned two things, bank-induced or as advised by bank, induced by customer. Classical case is you can find out the cases of the round tripping of accounts from the daily supplementary. Normally it takes place. Some impersonal account is debited by the branch and some cash credit account is credited, just to show the turnover. What we expect is that in case of cash credit accounts, the annual turnover is at least 3.5 times of sanctioned limit. Generally, I am saying, generally. So, in order to ensure that this account doesn't get captured as low turnover, some impersonal account is debited, CC account is credited, next day reversed. But in the meantime, there is a huge credit entry. Or in daily supplementary transaction, you may sometimes also find this, banks are doing this. They will find out, they will catch hold of some cash credit account which generally doesn't operate to fullest level, which has got huge unavailed limits. They will debit his account and credit some other person's account. Or they will debit his CC account and make some FD for that equal amount. Now, making fixed deposit is not the purpose of working capital finance. But on one hand, see, there are two advantages. It's a clear case of window dressing. They are inflating both sides of balance sheet. Of course, when they increase the advances, we become happy because our fees are based on that and now they are 10% up. But it's a case of window dressing. Debiting some CC account and crediting FD account for 7 days. It's a window dressing that gets reversed on 3rd April. So to be very frank, when we are going for bank audit, we should also see some exceptional report post 1st April. That will indicate, because post 1st April, they will unwind and undo so many things which they have done in the last week or last 15 days. Menu driven report, daily scroll, at least they should be checked for 15 days of March. Exceptional report, of course, it's a part of compulsory day-end activity, and exceptional report will highlight so many things. I will give you the examples of what warnings are there in the exceptional transaction report. And most important is various analytical reports and customer monitoring reports which are there in the CBS. Make best use of it. We will find out what are those reports. See, what we are saying is that when auditing with computer is not possible and we are making a shift in the approach of auditing around the computer, we have to make best use of what is available over there without understanding too much of technology. Classical example of analytical report and customized monitoring report is the SMA reporting, special mention accounts. Reasonably a new concept, what I am saying. Why I am saying new? Actually, it was there last year also, but there were so many technical problems, and somehow in financial year 22-23, most of the banks, they have stabilized their IT system for a correct reporting of SMA. Special mention account, a list of special mention account that's get generated every day, you can find it out anytime. It's a menu-driven report. Special mention account is an ongoing monitoring of loans and advances. Our concentration should be generally on SMA2 accounts. Please find out SMA2 report of the month of February and then find out why suddenly it has vanished in the March report. It is very simple to find out the fake recovery. It is the age of receivable, to be very frank, age-wise receivable. In Tally also, but Tally has got huge problems. There is a bill-wise reporting also of receivables. But when the bills are knocked off, they are not linked to each and every individual. Many things will appear on account. This doesn't take place in banking software. Every overdue would be measured with respect to number of days for which it is outstanding. Now this software is stabilized a lot. Concentration should be on SMA2. Of course, as far as CC accounts are concerned, the norms of SMA are different. There is no SMA 0 category for cash credit accounts. There is, of course, we know the logic. SMA account, a ready-made tool to monitor the NPA and to catch hold of any NPA. Even if it is not considered as an NPA, you are in a position to find out. If a particular account was always there in SMA2 category and suddenly it got regularized and now it doesn't appear in SMA and it suddenly has become standard, etc. You can find out what are the source of recovery. In RBI inspection, they have treated those accounts as substandard if the recovery is not from genuine sources. RBI is going to that extent now. But you can find out, make best use of SMA report. In fact, that is a ready-made tool, very simple to understand. And especially before asking NPA report, let me tell you, you have to effect slow poisoning on the branch manager. Don't directly ask for NPA report, ask for this first. Gradually you have to go to the conclusion. Otherwise, the moment he gets, when you go to audit, he has kept everything ready. Because SMA report is not part of audit, but it is a tool of audit. What we certify is NPA. Ask for NPA report, you will find everything. Now, this is only informative which I am saying. Where do we get all this? We talk about daily report, we talk about exceptional report, we talk about monitoring report, we talk about special purpose report. Bank-wise I have mentioned. This is only informative. Most of the monitoring reports pertaining to LFAR are available in Central Exception Monitoring Unit SEMO. Not elaborating much on this because it's there in the public domain depending upon the bank and especially with confidence without going into the too much narrative discussion, straightway ask for this to the branch manager. I want this, that's it. Don't ask whether this is available, he will say no. As expected, he will always say, no, everything comes from HO, we don't know. He will plead ignorance. Somewhere he will try to become oversmart, somewhere he will plead ignorance. Instead, we have to be smarter than him. Union Bank, credit monitoring and credit compliance. As you mentioned about PNB. Comparatively, BANC is absolutely very simple. You find everything all in one daily folder. Everything you will find in a daily folder. Those daily folders are sorted date-wise. Very simple. Because they are handling a very robust and scalable data of State Bank. So that is why it is simple compared. Finacle is slightly difficult to operate. I'm not elaborating on this because this being only informative. I was talking about garbage in, garbage out. I'm just highlighting what are the typical parameters when a customer master is created, because everything depends upon that. Name, etc. is all right. PAN, GST, customer ID, the most important subject matter of audit. Now, just giving some example, working capital limit, those are numbers. Out of above fund-based limit, suppose 500 lakhs is the working capital limit, fund-based limit is 300, non-fund limit is 200, whether it is interchangeable. This question has to be there, whether it is interchangeable. If yes, then you can switch over from fund-based to non-fund, so that cumulative exposure doesn't exceed 5 crores. But if this was not permissible and if you are still given bank guarantee, then it's over exposure. Name of the borrower, constitution, address, etc., etc. Yes, this will have to be, at least for some cash credit accounts, do verify the master input with respect to the file, because if anything is wrong, that is bound to result into incorrect output and incorrect verification. For example, margin on paid stock. As per sanction terms, it is 20%, and here if it is paid as 40%, then I am sure you are allowing him is more DP. Margins as per sanction terms is 30%, and here you have paid only 20%, means you are giving him, you are calculating DP extra. Sanction terms, see, if paid stock is 100, as per sanction terms, the DP should be 70. Here it will come as 80, because the margin, percentage what you have mentioned is incorrect. Many times banks are doing mistakes here only. Mistakes or errors, intentional or unintentional. Margin on book dates, often, because we concentrate on sanction letter. We have our green pen ready with sanction terms. Forget about green pen, find out this. Stock statement frequency. At least 2 years back, I have seen a bank where the stock statement frequency was mentioned as 999 days. अरे ये कहाँ से आ गया? नहीं, हर महीना करना पड़ता है, तो मैंने 999 मीन्स 2.5 years हो गया ऑलमोस्ट ना. दिस अकाउंट वो जिंदगी भर एनपीए होगा नहीं. Stock statement frequency matters. Ensure that it is correctly entered. At least, so that's what I am saying. You can cut down substantive testing and increase compliance testing. For if you have got 30 accounts of cash credit account in that balancing, 5 accounts to do, at least for the cases which have been financed in this year, at least you should see the master. DP mode. This loophole is there in Finacle. Derived means DP would be calculated based on calculations of various current assets, receivables, stocks, creditors, margin, etc., etc. Many banks, they have put the derived mode in disable condition, and it is in the they have set the button in such a way that DP is always equal to sanction limit. It will never calculate actual DP. आप कितना भी stock statement भरो, it will never calculate. It will not derive. It is enabled. And enabled means the only control is that DP doesn't exceed sanction limit. So by default, in case of certain borrowers, you may find that DP is always at par with sanction limit, because it doesn't derive, it doesn't calculate. This is what we talk about checking the masters. Credit rating Interest rate depends upon the rating given by bank. Lower is the rating, higher is the incremental interest, etc. Rating has to be seen. Whether the interest rates are linked to above, yes, no, next review date. Okay, this is most important now. As per new slippage norms, an account, irrespective of its recovery flow, it remains overdue of the review for more than 90 days. That has to be automatically calculated as a substandard in SBAC, System Based Asset Classification. Many banks, they had not done that, but it came up in various RBI inspections. Next review date has to be there. Many banks, they have found out one way, but that's okay. They make short review. Even that is also accepted. But frequent short reviews are not acceptable. In that case, this case should get classified as substandard. Frequent short review of 2 months, 3 months is not permissible. Because what happens is that many times bank manager is aware that the audited numbers are not that good. So under the pretext that audited numbers are not available, but recovery is all right, he would prolong the renewal and review based on the short review. बाकी ठीक चल रहा है. Audited results are not available. उसको मालूम है those results are hopeless. But frequent short reviews, they are not permissible. This is possible only when you see the master of that particular borrower. Exceptional transactions. Debits to income account, straightway you can have your answer in LFAR. Debiting income account is not permissible. Yes, sir. Exceptional reports. Bit louder, please. एक minute. Which can? Yeah, you can generate account wise or date wise. No. You can see, there are two ways of sorting. One is warning code wise and one is account wise. Warning code, of course, I don't know the code number, but say for example, 10 number warning is for balance exceeding security value. 11 number insure expired. 13 number limit expired. 14 number. No. There are n number of screens also. You have to follow so many screens. See, here only for the purpose of this PPT, I have oversimplified this, but there are, because even I will tell you, I have not covered those parameters. For example, reporting for the purpose of CRILC, CRILC reporting. All corporate borrowers whose total exposure exceeds 5 crores, they have to be reported somewhere. Now 5 crores means sum total of fund-based and non-fund limit. So whether this account is eligible to be reported for CRILC, I have to say yes. I have to flag it as a click, I have to say yes. Nowadays those parameters, master inputs, they are getting more and more every day. I will give you one more. Whether this case is eligible for CERSAI registration. This is a parameter. If I say yes, and if I don't find a corresponding CERSAI creation number after 1 month, that should follow in exceptional report that this account was liable for CERSAI registration, but that has not taken place. Master inputs, yes, they are, forget about one screen, 7-8 screens also. But irrespective of that, at least for large borrowers, we should see that. It is also expected, let me tell you, the information of corporate defaulters, it has to be uploaded on the national repository which is created by IBBA under IBC code. National E-Governance Services Private Limited. Now, whether this case falls, whether this case is registerable for that, that is also master input. If anything is wrong, the output would be wrong, subsequent output which is generated by this system, it would be wrong. But nowadays, parameters are getting more and more comprehensive. Every day they will go up. One more flag is CGT SME. If this flag is on, next year I should be in a position to renew that. So many more parameters can get added, many more parameters. Change of master data is a very important output of exceptional transaction report. It is also called as a master modification report or master modification trace report. Many times the changes into the master, they are non-financial. Say telephone number is changed, that's okay. Address is changed, okay. But if you change the interest rate, many times the interest rates are also changed because at the initial approval, you are allotted, you are sanctioned a particular interest rate, then later on, depending upon the reputation of the customer, depending upon his bargaining skill, many times the interest rates are reduced and the difference is debited to income account. But any change in the master data, that gets reflected in every exceptional report. HEXCRPT is the path in FINACL. HEXCRPT. I have given it at the end of the presentation. Dormant account activated is a fraud prone area. Dormant account is such an account where practically it has gone out of sight of many persons. A perpetrator will try to activate this account by depositing some 100 rupees and withdrawing the entire thing. Dormant account activation, it should form part of our audit at some point of time. It is a fraud prone area. That you can find out that this in exceptional transaction report. One question remains. Are we supposed to verify the exceptional transaction report for of all 250 working days of banks? Answer is no. At least for last 15 days we should see. That's what my humble suggestion is, that when we talk about auditing around the computer. Especially in TCS, this report is very simple. There is an age-wise analysis of all such accounts under the head BGL, age-wise receivable. I'm not elaborating on that. Nowadays we don't have too much clearing suspense, but sometimes in order to accommodate a party is given credit of an amount which is not realized, and the amounts are allowed to be kept parked as a debit balance in clearing suspense account. That should form part of, that should deserve our attention, because it might be an attempt to accommodate a defaulter. His account is forcibly credited by keeping this amount in the debit of clearing suspense. Bank guarantee model, and typically I am talking about a non-fund facility. What reports are available about bank guarantee? They are covered separately. But I am talking about the process of issue of bank guarantee. There is a concept of SFMS, Structured Financial Messaging System. SFMS is a hard-coded protocol of transmitting the message electronically. It is a protocol of transmitting a hard-coded message by the bankers issuing the bank guarantee to the beneficiary and his bankers. It is also necessary that both CBS and SFMS, they have got a perfect interface. When it was not there, what wonders Nirav Modi has done in 2018 in PNB Bank, that's clear and that's in the public domain. He went on issuing various messages It amounted to some 17,000 crores, which has got no relevance with CBS. CBS was not aware, nowhere it was getting covered. And as far as the recipient was concerned, he was saying, he was under impression that they are getting messages of confirmation through secured messaging system. At least ensure that. Now again, a branch auditor will say, how I am supposed to know this? I know you are not supposed to find out this electronically, but at least include this in MRL. If he doesn't understand what you are writing, get it certified that those SFMS have got direct interface with CBS, and how you can independently operate that, verify that, let me tell you. The moment SFMS message gets flashed, CBS will have automatic entry of bank guarantee appearing on both sides of balance sheet. This is interface. In Nirav Modi's case, nothing appeared on the balance sheet. He only went on, just like sending WhatsApp, he went on sending messages. The moment you can correlate some bank guarantees, it has also got time and date stamp. The moment a message is transmitted, at the same time, you will find corresponding entries on both sides of the balance sheet in CBS same day. Cross-verify that. At least verify few messages which have been electronically transmitted. And then include that in MRL. That yes, there is a complete interface. Branch manager will say that I don't understand. Ask him to get it certified from the regional office. If you don't understand, get it certified from another. But I want this, that's it. Because we are not going to own up this responsibility of such a magnitude. In case of PNB Bank, somebody else did the mischief and somebody else was penalized. We should not be a part of this. This are purely informative. And I have even also, based on practical experience, wherever I had gone for audit, I have already jotted it down, or some are in the public domain, but I have tried to include some very basic and important aspects. Interest table history is much important. That will help you for LFAR. That will also have you the revenue assurance. How many times the interest rate was changed? Who authorized that? What was the reason? Interest rate history there. Account limit history is there. How many times TOD was given? There is a history. All those are menu-driven reports. They are hotkeys. You can use them and get the desired output. It is so simple. Loan account master print, yes, that is important. Here, of course, very lengthy, but instead of printout, we should prefer monitoring this on the screen itself. Because printout, again, it will say that, no, ये printout नहीं आ रहा है, बहुत lengthy है. Conveniently, many times they said कि printout नहीं आ रहा है. Better to see it on the screen itself, slightly lengthy, but that's all right. Loan account master print is very important. Whatever I have been mentioning, garbage in, garbage out, you have to master the masters. You can verify this over here. Loan balancing report, stock statement. Yes, TOD is important. Frequent TOD may have got a direct bearing on LFAR. We are making best use of reports made available by CBS, but it has got implication somewhere else. If you find that a particular borrower is constantly given TOD, it goes without saying that in LFAR, you can mention a specific adverse comment about the heading credit appraisal. If a borrower is constantly required to give TOD, it means that initial appraisal and working capital limit, it was not correct. For initial sanction, he might have submitted the proposal with a lesser amount, and then frequently he is resorting to TOD itself means the working capital gap as per CMA, and in reality, it was not all right. At least we can make a passing reference of that this particular person has been given frequent TODs. prima facie it indicates some deficiencies. I am not saying fraud, some deficiencies in the credit appraisal. Second is most important, HATOR. In respect of cash credit account, generally what we say is that the turnover to that account should be at least 3.5 times of sanctioned limit. Now, in case of cash credit account, how you will try to find out the turnover? If when you ask for this, the bank manager will give you printout of 40-50 pages. Now, we cannot make any use of it. There is a one-page report which is called as annual turnover report or summation report. In TCS, it is called as the evaluation report that will give you total credit submissions. That's it. You can take this report for at least 5-10 cash credit accounts and put a separate table on your Excel. This is account number, name of the party, sanctioned limit, desired turnover, actual turnover, and gaps. If the actual turnover is hardly 1.5 times or 2 times, you should say that there are inherent weaknesses. Those accounts, they might look to be standard, but there is inherent weakness. And the inherent weakness is that your working capital cycle is not moving fast. Whatever you have mentioned in CMA is not happening. This report will indicate you so many things which you can critically write about LFAR. Post disbursement follow-up, comments, yes, you can generate from turnover report. Yes, this was age-wise breakup is available about sundry assets as well as sundry liabilities. This is the menu. That's it. Audit output, audit input needed as well as the source which is there in FINACL. TCS, the source is somewhat different. Here I have given some keys about, okay, I was talking about guarantee. This is important. This is available. Do not rely on any manual register. Simply disown that. Whatever is there, it's here. Because we have to take care in the case of bank guarantee because it is a non-fund facility. N number of things can happen out of the negligence out of it. Credit monitoring reports, as I have already mentioned about CBS environment, it has got 3 aspects. Menu-driven report, exceptional transaction report, and special purpose monitoring reports. Credit monitoring reports, SMA, yes. Even one particular report seems to be very simple and it's called as a VPIS. It's all talk about valuable printing and stationery items, VPIS. Term deposit interest receipts, and many other continuous stationeries which are valuable and where adequate control is necessary to be over there. It's there in this module. You can find out this because I think there is some reference about stationery also in LFAR. Not that much important, but especially about valuable inventory, stationery, this report is important. Rescheduled loans and advances. You get from HLARA, details of reschedulements and restructuring, as well as HFTR is most important, where I have mentioned that there are bank-induced transfers as well as bank-induced debits. Classical example, impersonal account is debited and borrowed account is credited. This is one part. Because it is an impersonal account, nobody will notice that. Your doubtful recovery, it will get recovered on paper. Your overdues will come down. In the first week of April, you will make a reversal of this. So debiting an impersonal account and crediting a borrower's account, or debiting a cash credit account for a borrower who otherwise would have to be charged commitment charges for not availing limit. Debiting that borrower and crediting fixed deposit or even current account, so that you can inflate both sides of balance sheet. There are clear cases of window dressing which you can find out from HFTR is very important report. Cash credit account summary I had just mentioned. Since the lecture started with a 15 minutes gap, 15 minutes delay, it is coming to an end with 15 minutes delay. So without hastily forwarding any PPT, whatever I wanted to cover, I tried to do that. Most of the part was only informative. There was nothing new. But as far as takeaway is concerned, make best use of technology because it is an enabler. Though auditing with computer is not permissible, auditing around the computer is the most feasible in today's scenario. That's all I wanted to say. Thank you very much.
Thank you, Kunte sir. Any queries? If members have any queries, maybe we can take few. Yeah, we will be sharing this PPT. So it will be sent over email to all the participants. No, we will be uploading, but all the participants will be getting it over email as well.
Sir, actually it is regarding software and applications installed in bank system. So apart from checking in the C drive, what will you suggest? Where can I check whether the softwares and other things are installed in bank system?
Can you repeat, please?
Actually, there is a question in LFR that installed software and some applications.
Yes,
Okay,
yes.
and in this case, generally I visited C drive and check in applications whether there is any extra
In
application.
fact, I had addressed
But-
this issue because when we were talking about LFAR, right?
Yeah.
Yes, technologically it may not be possible for us to go into too much details. We are not detective, nor we are doing any forensic work. So at some point of time, you can make a preliminary inquiry about whether anything else is loaded. If not, you can at least include that in the MRL. Better way is MRL.
आता आतापर्यंत जेवढे ऑडिटर जे स्पीकर आले ते सेंट्रल स्टॅट्युटरी ऑडिटर होते. सगळ्यांचं म्हणणं तुम्ही MRL घ्या, तर मग इन्स्टिट्यूट रेकमेंड का करत नाही की रादर सेंट्रल स्टॅट्युटरी ऑडिटर ब्रांच ऑडिटरना स्टँडर्ड MRLचा फॉर्मॅट का देत नाही?
ओके ओके.
कारण की हा मेजर इश्यू आहे की समजा मी चुकीचे कमेंट टाकतोय की 100% आहे आणि तुम्ही माझ्यावर रिले करून म्हणताय की 70%च असेल, तर मग सेंट्रल स्टॅट्युटरी ऑडिटर ब्रांच ऑडिटरना का देत नाही किंवा ICI त्याच्यावर इनिशिएट का घेत नाही?
Okay, okay. As far as MRL is concerned, management representation letter, it is in our interest that we get some documentation signed from the auditee in order to insulate and safeguard ourselves. Instead of a standard template or MRL, I think we know the profile of our auditee and we should be in a position to draft that letter as comprehensive to the extent possible. Even for corporate audits, we are doing separately on case-to-case basis.
So, but on a corporate client, that's a different issue. But the bank is a public domain. They're the main. For example, 500 branches are there, and one is a central statutory auditor.
Yes.
They know the loopholes, whatever they are existing.
But they are not sharing, and only topic is that central statutory auditor and their expectations from bank branch auditor. But they are not sharing exactly.
That is a major issue, no?
Because there is a question of materiality. What is material for a branch auditor may not amount to material for a central auditor. So that is in our perfect discretion that we should cover as many as points to the extent possible. We know the profile of our auditee. Because for my branch, if I find that sum of rupees 1 lakh is material, at HO level it might not be material, so he will not include that. But if I feel that it is material, I should include that. What I am trying to say is that, what I mentioned, in the initial phase, on the very first day when you approach a bank for audit, I mentioned that you need to understand the entity and then environment. Once you understand the entity, your areas which you will get certified in MRL are almost clear. I already mentioned that looking at the trial balance size, you can find out if it is a deposit branch, the MRL would be slightly different. If it is advances branch, it would be slightly different. If your advances mainly includes project finance, the MRL would be different. Depending upon case to case, I think you should draft the MRL which is as comprehensive to the extent possible. We should not wait for somebody providing us template for that.
Thank you, sir, for answering the queries. And I would just like to add one more point. Recently, the institute has issued the guidance note on bank branch audit as well. And they have covered one standard template for MRL. But as sir rightly said, based on the profile of the branch, we need to customize it. But a standard template and few standard items have already been provided. So I would request everybody to go through the guidance note for those templates. So I, CA Sachin Minyar, on behalf of Pune branch of WRC, thank Kiran Kunte sir for sparing time. And actually, it's always difficult to give the post-lunch session. And even while I was sitting over here, I was doubtful whether really I would be able to concentrate throughout the session or not. But the way he had taken us without going in through those standard kind of PPT slides, rather he took us through the practical side, and he has also helped us with those standard report generating in different softwares that we can use. So that will really, I think that will be helpful for all of us. So before going into the next session, we would be taking a short break for tea. So I would request all participants to join back in 10 minutes. Thanks, everyone. Thank you, sir.
Of the central statutory auditors, what is the problem at the ground level which is faced by the branch auditors? This and many other issues will be discussed in this upcoming session, and we have with us CA Ruta Chitale, Region Council member, to navigate this session. I request all the participants to actively participate in this Q&A. After the questions will be asked by the moderator, even you all can join for this open house discussion. So with this reference, I quickly introduce all the panelists today. Though they don't need any specific introduction, few of them are joining for the first time over the last 2 days. So I quickly introduce every one of them. CA Ruta Chitale, she is the moderator for the day, and she is a Region Council member, speaker on bank audits. She has carried out various special assignments. She is into practice for last 20 years. CA Dhananjay Gokhale sir, you have already had his session in the morning. Then we have CA Anand Joshi. He is a practicing chartered accountant with more than 2 decades of experience and a managing partner at HMA and Associates. He has handled statutory branch audit for several nationalized banks, including the ELBs. He has secured 39th rank in All India Merit List for the CA exams. He is a certified international umpire in badminton. That is a distinction in his profile, which I can see today. Then we have CA Madhav Mate sir. He is fondly known as Abhay Mate sir. He is a banker. He is a past chairperson of Janata Bank. So today's panel has a blend of bankers, central statutory auditors, the bank branch auditors, and the experts in the field. Mate sir is faculty for various seminars, and also he has given sessions on effective way of living through stress management. He is a corporate teacher for Art of Living, imparting knowledge on the excellence at workplace. He is ex-trustee at Nanasaheb Parulekar Charitable Trust. Sir is mentor for the Bharatiya Yuva Shakti Trust. The profile is really very long, but today we want to discuss many issues with reference to bank audit, and I'm sure I should give the stage as early as possible to the moderator to navigate the session ahead. Before that, I request the chairperson of Pune branch, CA Rajesh Agarwal, to felicitate CA Mate sir. We present a token of gratitude and respect for all the time. CA Sachin Minyar, to present a token of gratitude to CA Anand Joshi sir. CA Pranav Apte, to present a token of gratitude to our moderator for the day, CA Ruta Chitale. Thank you so much. Ruta, uh, so I hand over the mic to Ruta for the further navigation of the session, and for the participants, we will keep on the hand mics in the audience after the Q&A from the panel. Thank you. Over to you, Ruta.
Thank you, Amruta, for this wonderful introduction of all the panelists. Welcome here today for the last session on bank branch audit. Am I audible? Yes. So welcome here today for the last session, panel discussion on National Seminar of Bank Branch Audit. Today I have also requested Kiran Gunde sir to join us today here for panel discussion, so he has also kindly agreed to be here. What we will be doing here now is I have jotted down some 6-7 questions related to practicals. What I feel that there might be some issues in bank branch audit or conduct of bank branch audit. Today we have an expert panel who has really looked at various aspects of bank branch audit. You must have also heard them during the course of this 2 days seminar. But I felt that there must be a need to really talk about some practical situations, and I wish that all the panelists can also answer whatever the contributions they want to do to this particular question or any particular question. They might feel free to do so. At the same time, I request the audience to also please feel free to ask your questions in between as well. We can take them so that it will be a more fruitful discussion, and we can deliberate on each and every point in great detail. So to start with, we have also had a first session about audit planning. But audit planning per se is such a vast subject, and it depends and differs from bank to bank. So the first question here is related to pre-audit visit. Generally, this is what we do when we have the famous and the most coveted letter in our hands. What we do is we usually ring up the branch manager, ask for his time, and go and visit him to just understand that what kind of branch it is. Okay, if it is a faraway branch, then sir, it creates a problem that how to communicate and correlate with those branch managers. So my first question here today is that pre-audit, before also starting the audit, what should we be doing? What all communication is required? Is it required? And whether we should be, there is a checklist anyway available on the net also about audit planning, what kind of data we should be assembling. So can you please throw light one by one? Maybe Anand, you can please start on pre-audit planning and pre-audit visit to the branch.
Thank you, Ruda. Actually, pre-audit visit is, according to me, very important, because the first answer you get from the bank manager कि 2 दिन में audit खत्म हो जाएगा. So you need to go and emphasize your point that what you are going to look into, and that you are going to look into in depth and not covering it just like that. Plus, the checklist, as she said, it will be available everywhere. But my suggestion always would be that it should not be sent as it is. You should first have a discussion with the manager, look at the nature of the strata of the advances, what all functions are being done by the bank, whether there is any forex management, whatever. And then give specific questions so that you get specific answers. Otherwise, that checklist is useless otherwise, because if you don't customize it, there is no, the branch manager will also just look at it in the same way. At the same time, I think all CAs, though are aware, there are the procedures such as engagement letter, then taking NOCs from the earlier auditor, and not only taking NOCs, I suggest that everybody should talk to the earlier auditor, have a discussion with him about his impression of the branch, what exactly he did, how much, whether he faced any challenges, so that when you go to the branch, you are not faced with surprises. That is what I feel.
Yeah, I think that's a very important point to actually discuss also with the previous auditor, not only send a letter of NOC. I think it's really valid. Sir, would you like to add something?
I would just like to add a couple of points. First is that whenever you are going for a pre-audit visit, or rather when you get the sanction appointment letter, not sanction letter. So on the receipt of appointment letter, actually you need to first assess that whether your firm is really capable to perform that audit or not. If you are not having sufficient manpower which is sufficiently trained, it's a little risky affair to even venture into that particular assignment. Just to give an example, that suppose you are having just three of you are there at the at your office, Practically, you cannot carry out audit of, say, multiple branches, say 2 branches. Secondly, as far as the appointment letter is concerned, you need to go through each and every clause of that. It contains certain vital points. First is that it will contain the deliverables which are there, in the sense what you are supposed to deliver. Along with that, there will be due dates which will be specified over there. If you don't agree with the due dates, it's better that you should not accept that assignment. There are ways and means to ensure that sufficient time is made available, wherein you can project before the bank that certain information was required, which was not given to you, and that's why the date is getting extended. But by sheer logic that if you don't have manpower and you are having only one team of say 2 or 3 persons and you are undertaking audit of 2 branches, you need to think twice before you really get further and get into the checklist part. Just one point, since that topic is there, typically in all the assignments related to at least bank, there is always a clause that you cannot sublet that particular assignment. So be aware about those guidelines. Those are ticklish guidelines. If you play around with those guidelines by saying that you are working along with other firm, it's a breach of non-disclosure agreement which you are making. So in case if you, just hypothetical case, if you come out with a scenario wherein you are in disagreement with the views of the bank, and if the bank is well aware that how you are conducting the audit, it's a very easy thing for the bank to proceed further against you. So be little aware about that. Rest of the things he already said, so I would repeat that. So I just thought that I should add this kind of caveats, I should say. It's not to discourage to any one of you, but still we need to know that what is our capacity and whether we are able to perform that work. Then only it's better to say yes to a particular assignment.
Time available for completing the audit starts from 31st March, 1 second thereafter, till 7 days is the maximum time limit. Because generally, people don't give further time limit at all. If it is so, how can we plan the audit in such a way that whatever things we are supposed to see, we have already seen it, and then only we report. So pre-audit visit is very important from that perspective also. What we can check in pre-audit visit? Concurrent audit reports of the earlier period, I will not say earlier year, but the period. If at all the inspection took place from RBI side, then the inspection report of the earlier year, that is also available. So many ready-made food is available just to eat. And if it is available, then your time limit would be honored. Because what I said, that after 1 second, that particular branch manager will be after you, complete it. Can we sign it tomorrow morning? That will be the case. So all these things, if at all you do it prior to starting the audit, commencing the audit, then definitely it will be a helpful thing. Another psychological aspect I would like to touch upon. See, after all, we all are human beings. So if at all the friendly relations are already established with the branch manager and the staff, then the smooth functioning of the auditor will be ensured. If at all there is tug of war, then probably audit will not be conducted smoothly. So pre-audit visit is also important from that perspective also in my mind.
Sir, one more thing related to this pre-audit, how far it is important that we also have a word with the zonal manager? Because many times it happens that branch managers may or may not be available. There are so many cases where people call up that, okay, we are coming for audit, and he just doesn't want to be there. There are such cases, definitely. So should we talk to zonal manager, or should we ask the bank to give us, or is it like cribbing? What do you feel? What should be the right way to handle, especially for the people who are newly conducting this kind of audit?
No, I feel so long as the branch manager is cooperating and giving the information, there is no need to escalate unnecessarily, because it could create a problem between the branch manager and your relation. Because if he could say that I am giving you whatever you want, why do you need to speak to my senior? So as a procedure, I don't think it should be done, but whenever necessary, of course, you need to escalate. And in any case, I think nationalized banks, generally the audit zonal managers generally call you and talk to you that you have been given this, whether you are going to be able to do it or not. So in generally they talk to you, but I don't think any specific talk is required.
See, as far as visit to zonal office is concerned, rather we don't have that prerogative even to visit to zonal office. If they are coming and visiting to you, that is fine, but there is no need to even visit any of the office other than branch, office. Secondly, if the branch manager is not available or if the vital staff is not available, it's their lookout. What you need to ensure is that if any information which you are seeking, suppose verbally you are seeking some information and the information is not received within the reasonable time, or even otherwise also, it's better that you put that everything in writing, give them time to respond back to you. If it is not responded back, disclaim it and close your report. You don't have to even extend that timeline. So suppose a report is not made available to you, you can mention as a scope limitation, disclaim that as a disclaimer of opinion and conclude that. No one is going to tell you that to wait further or to work extra. In fact, just to put it in the other way around, you can always say that 7th is my deadline. So whatever was concluded by 7th, I am concluding. Let them say that extend the audit rather than we telling them that we want to extend the audit. So that typically works in your favor. You can tell the manager that if you want to conclude the audit today, we can calculate it today with the scope limitation. So, the pressure need not be on us actually, it should be the other way around.
Agreed, definitely. Abhay sir, you talked about concurrent audit reports and these reports. I would want to say this, that many times concurrent audit reports are complied and closed. That is what the answer is given, that it is already closed. So how much weightage or such type of things should we be giving also to concurrent audit reports? Is it important for people to look at concurrent audit reports, or should we just leave it at that?
There are several funny ways also to close the audit report, concurrent audit report. Instructions have been given. What is the closure? Noted. What is the closure? If these type of things are there, then it is not at all a closure of any concurrent or whatever is the internal audit report or whatever is the case. It is not at all a closure. So closure means there must be reasonable answer for that particular query raised. And if it is not so, then it is not at all a closure, and that particular point is readily available to be incorporated in your report. So probably, if such things are there, then probably half of your report will be concluded once you read the concurrent audit report. So we can very well see from that angle also.
I just want to add something. As far as the inspection reports are concerned, RBI has introduced RBIA, the risk-based internal audit. Now, typically RBIA, it talks about various high risk, low risk, medium risk, and finally the conclusion is whether the branch is satisfactory or unsatisfactory. If you find that, as per latest inspection report, your branch was at a high risk, probably your audit program will have to be changed drastically. This is what I wanted to say.
He referred RBIA. I worked in that particular field a lot. RBI, specifically risk-based internal audit, it has been divided into 5 categories, that particular branch. Extremely high risk, very high, high, medium, and low. So whenever you go for the audit in the nationalized bank, that will be immediately available. As far as the cooperative banks are concerned, that particular aspect may not be readily available because the risk-based internal audit started for that particular cooperative sector just 31st March 2022. So it was the first year. And in that particular year, it was to be commenced in that particular year. So many banks have drafted the policy, version 1. It was just like copy-paste business. And that particular policy was taken for in the committee of the audit committee or board of directors, and that particular policy was sanctioned. So for cooperative banks, audit, risk-based internal audit is already started. What is the fact? But on the facts, it is not the case so. But the risk-based internal audit is a very important tool, and you can very well ascertain what is the risk factor of that particular branch, and the scope of your audit can be enhanced according to it.
as far as cooperative banks were concerned, just 22-23 ला फॉर द फर्स्ट टाइम इट वॉज रोल्ड आउट. पण पहिला पेपर इतका सोपा होता की एव्हरीबडी वुड पास अशा तऱ्हेने काढलेले क्वेश्चनर्स होते. नॅशनलाइज बँकांचे इन्स्पेक्शन रिपोर्ट विच आर बेस्ड ऑन द रिस्क फॅक्टर्स, दे आर क्वाईट कॉम्प्रिहेन्सिव्ह अँड कॉम्प्लिकेटेड. हॅव अ लुक ॲट दिस रिपोर्ट and depending on that extend your substantive testing also. But as already mentioned by me, you have to give preference to the compliance testing also, mastering the masters.
That's a good point. What I would like to also add here is how about deposits? Deposits, PMLA guidelines are also there. So risk here is omnipresent right now. So how do we handle this? Especially now going forward to audit planning, so many a times we are giving deposits, KYC, these areas for juniors to check. So in such a case, what is the precaution that we should be having? Whether these risk reports will help us in understanding that, okay, this area is all right to be given to juniors. So maybe this can be a pre-audit visit part also to understand what are the risks and then plan accordingly. So maybe you would want to add something to this?
Basically, about this customer ID section, now in most of the nationalized banks, it's a centralized activity. Customer IDs are not created at the service outlet level or branch level. There is a set of officially valid documents, OVD. Every bank will procure the officially valid documents and then send it or scan it. Somehow they are expected to store such documents in the branch level also. Customer ID is created at the branch. The problem arises in case of certain specific corporate clients, let me tell you. In case of one particular corporate client where a current account was opened in the name of insolvency professional, the set of required documents for creating ID has to be unique. Mere PAN, articles, memorandum, etc., they were not sufficient. The officially valid document was essential in the form of NCLT orders passed by the NCLT authorizing the resolution professional to open a bank account with a specific bank. Even, see, account-wise, the customer ID creations, there is a set of separate guidelines available in nationalized bank. If you want to open a RERA account, it should be supported by a form number 3 certified by chartered accountant, etc. So what has to be done in case of customer ID is that we have to see the specifications. For educational institute, there should be a separate set of documents, say charitable commissioner's approval, 12A approval, etc. Look at the specifications of the account as far as the customer ID is concerned. And when you talk about customer ID, ensure that all accounts of the same borrower are under same customer ID. That is one point. And as far as PML is concerned, because that is generally handled at HO level, there is a concept called as a STR reports which are to be uploaded to the Financial Intelligence Unit FIU, and it's called as the business rules. Every bank has set their own business rules on the basis of which the reporting is done. So at branch level, we are not much concerned with PMLA.
Okay, you want to add something, Anand sir? What? The point what I'm trying to bring out here is in LFAR and as well in case of deposits, how far we need to stress, because RBI is definitely insisting and putting a great trust on RBI deposits, KYC and all these areas. From that angle, do we carry a risk? Do we need to, how much weightage should we give while planning the audit as far as deposit accounts are concerned? How do we sample it? That is the point also I want to ask. If it is centralized, it's okay, but what about branch? Do we really carry a risk? If not, should we just say that, okay, this is a centralized process and we don't have to do anything about it?
No, actually we cannot say that, because though the ID creation is centralized, the document collection and uploading on the portal is done by the branch itself. And many a times there could be cases where म्हणजे आपण कागदाला कागद लावणे म्हणतो ना तसं की मेमोरंडम म्हणून एक पान जोडून टाकलं, जस्ट वन पेज इज अटॅच्ड, सो इट गेट्स क्रिएटेड. सो सच अनॉमलीज कुड बी देअर. सो यू there should be a sample properly drawn by using maybe Belford analysis or strata, what is the type of accounts, how many types of deposits, then how many types of accounts, how many educational institutes. And on that basis, you should take out a sample and definitely check on the sample basis. Plus, in addition to that, I think the concurrent auditors, if are appointed for that bank, they are always given this responsibility of checking it fully. And concurrent auditors being chartered accountants, we can definitely rely on their reports to certain extent. I will not say that fully rely on it, because then your job as a statutory auditor is lost in that case. So you should do a sampling and should verify that. But a good sample along with proper address to the concurrent auditor's report will mitigate the risk, is what I feel.
I have a little different view. See, as far as your scope of work is concerned, as I said, you need to understand the scope of work. Whether the CKYC checking or KYC checking or PMLA reporting, whether it is really forming part of your scope or not. So suppose you want to just have a kind of assurance on you, you can decide your sample size. It need not be on a larger side also. What you need to know is the audit team which you are deploying should be aware about what is KYC norms are there, which is prescribed by RBI. At least an overview of PMLA norms. I'm not saying that one has to get into in-depth of that. Nowadays, the banks are getting, or rather getting into a CKYC concept, wherein practically the KYC and documentation part is not exactly the same as it was there in earlier days. At the same time, what you need to pay more attention is maybe dormant accounts are there which are activated now, or risk categorization of customers is there. So you need to understand the process related to KYC and PMLA, satisfy yourself with the process. If something is centralized, specify that in your report, that is you are not verified, or you disclaim that is not in your scope. Rather than getting into something which was not really part of your scope, because you have ultimately 7 to 10 days. So you are not there to replace concurrent auditor. Better to stay away from that. We don't have to get into that mode also. And as far as STR, CTR reporting is concerned, it is a centralized function, but at the same time, STR instances are always reported at branch level, in the sense probable STR. So you need to understand that what is the methodology which the bank is adopting. So you can just pick up one sample for one day, that which are the triggers which are generated from PMLA software. See that how the branch manager is handling those triggers. You might come across a case wherein he just putting dot and saying that it is rejected. That is something which is not expected. So if process is something which is fine with you or reasonably satisfactory with you, that is more than sufficient exercise, because ultimately your scope is limited only to expressing an opinion about true and fair view. You are not investigator, you are not concurrent auditor. Don't get into the area which is not in your scope. And what you are paid for is only for expressing a view about true and fair view. We are not here to certify the entire branch. So that's what I felt.
I think he rightly said about disclaiming certain things. There are, even in case of some banks, some loans are just parked in the bank, whereas you don't have the documentation available to you. So it is very important that you disclaim such things in the report, that these loans were though a part of the profit and loss account, and though a part of the system, you can see them on the system, but you don't have the documentation. So you have to specifically mention that we are not able to check the documentation, and you should disclaim such things.
I would like to touch upon a totally different aspect, not necessarily connected with this, but however, the word sample has been used by all the three speakers. And therefore, how the sampling is to be done, that is also a very important thing. Because what happens, if at all you select any sample by own your wishes, and if at all, suppose I will take the practical example. Suppose 100 accounts are there, and out of that you want to check only 10 accounts, because 10% is your sample size. How to select those 10 accounts, that is very important thing. So firstly, if at all it is the data dump, whether it is loan case, whether it is deposit case, whether it is KYC case, for everything it is applicable. So for the data dump, you will have to give the additional one column in that particular thing, that these are the serial numbers of 1 to 100. Because you are, if at all it is say loan account, that loan account sampling you can never do. It is not practical at all, you cannot do it. So you have to add one serial number 1 to 100. Out of that 1 to 100, you have to select only 10. say you selected 13, you selected 17, you selected 18, and thereafter something happened and either the inspection or something went wrong and someone selected account number 14 from the sample, and in that particular account number 14, some lafada was there. Naturally, what will happen? The first instance or the first task would be why you have not selected that 14 number in your sample. Yesterday also, C.A. Sharma, who is additional commissioner, he also touched upon this point. If at all it is so, so the first charge against you would be, you were knowing that in 14 there is something bad, and that's why you have selected only 13 and then jumped to 17. So if at all, in the Excel sheet, very simple technique is available for random numbers. If at all you generate 10 random numbers out of that particular thing and keep the screenshot of that particular sample with you. The keeping of screenshot is very important, because next time if at all you want to do the same thing again, same numbers will never come. So that's why it is very important you keep the screenshot, and in that screenshot 13 and 17 were there, therefore I jumped from 13 to 17. That does not mean that I was already knowing that in 14 there is something which is not to be seen or not to be reported, and that's why I have not chosen 14. At least that blame will not come on you. So that particular precaution is very necessary from my angle.
I'll just add one point actually. See, all of us needs to be aware about which are the standards on auditing which are applicable. You know, like say sampling, there is a standard on auditing. There is a process which is specified. You need to document that process based on each and every standard. So your 90% documentation part gets over actually. And fortunately, in most of the standards, there is a illustrative examples and illustrative reports also which are given as to how to do that. The real problem with all of us is that we are not even aware about how many standards are there and which are those standards. So sampling is one of that, which is presumed to be known to us. We need to prove from our documentation that we have gone with the standard. So there are methodologies also which are defined in that. There is a specific mention about how to document that. Our audit working paper file should contain that. You know, I just thought to add it up to what sir was saying.
What I would like to add further more to the sampling is that what about if we take top 10 depositors just as we take top 10 borrowers, top 20 borrowers, so that apart from even random number sampling, at least we will cut down on the risk area that some problems generally happen, or some adjustment, some issues happens usually in case of who they want to favor. So top 10 depositors maybe, what do you think?
I will give you an example of that. Recently there was a RBI letter of 6 March. They are talking about 70% coverage. They are also talking about top branches. At the same time, even RBI is mentioning that cross-section and all types of advances, nature of business is required to be covered. So top 10 can be one of my criteria, but that cannot be the sole criteria. So what we need to do is, before we begin the audit probably, we need to document that what should be my sampling technique. Stick to that sampling technique, which might be any technique, which is according to you is correct. So for example, if you are saying that I want to cover top 10 deposits, plus every product I want to cover say 5, those 5 numbers will be some random generation, or it can be predefined also, that I can always say that out of total sample of say 5,000 deposit holder, every say 1100 deposit is the one which I want to say. So there is not a random generation, but without knowing that database, I have already created my form document. I can go with that also. But only restricting to top 10 is not sufficient. That ABC analysis concept has to be carried out.
In fact, he rightly said that the strata is to be maintained. So if what you said is also correct, say out of,
addition to that,
yes,
we can
out of
do-
all the top 10, yes, 100% checking.
And plus,
Right. Plus-
down the line, we
Yes.
can always
So
select on the basis
right.
of whatever sampling
Right.
method we want to select. Perfect. Moving forward to the certification part, not only in case of audit reports, there is a big area of certification which we need to do at the end of it. And more often than not, these certifications are given at the fag end of the audit period, that, okay, now this is the certificate we want you to sign. In such cases, how do we handle this? One, I know that in case of priority, Maheshwar Marathe sir has already explained that how to actually find out things. But whether, would you like to say something more about how to handle such things even at the end of the period? Or do we say that, or maybe you can throw some light upon Ghosh Jilani certifications, just as we discussed PI. Sir, you can start.
See, as far as certification requirements are concerned, RBI is expecting every area to be certified by the auditor. Uh, priority sector lending is one of them. Talking about any bank, like whether it is a commercial bank or whether it is a cooperative bank, the idea of priority sector lending target achievement is RBI wants pattern of advances to be in a particular manner. Now, having said that, there are some odd expectation from regulator side also, wherein quarterly data is required to be certified. Now, there are challenges in that. Firstly, the master data purity is not there. So ultimately, when we want to certify something, we need to restrict by saying that we have done sampling, specify the basis of that, use the illustrative format of guidance note which is there for special purpose reporting and certification, which talks about the process, that is the scope of work for that certification, process which you have carried out, and your observations. So ideally, the bank which is asking you to give that certification, it's a one-pager certification if you have seen. So that should be the annexure to your audit report or certificate report actually. And you need to say that these are the process which you have followed. Now there are challenges in that. Like for example, there is no process of master data verification which the bank has carried out. Disclaim in your report that you were not able to verify all the master data because you are issuing a certificate. Also remember one thing, that even in certification also what is expected is true and fair certification. It is not true and correct. Institute has come a long way from the true and correct concept of certification. So no one is expecting from you that you need to certify 100% correct certification. But I will just add one ticklish issues, which might happen. PSL is one area wherein disclaimer is the best thing, or scope limitation I should say, not even disclaimer. And let the RBI do whatever they want to do. I'm not getting into regulator shoes. But there are interest subvention certificates wherein there are challenges. Like for example, for export, whenever the interest subvention certificate is given, and suppose later on, the export doesn't happen. So typically the charges are commercial, commercial rate which is charged. But what about earlier, interest subvention or, those things which are availed? Regulator or per se RBI circular doesn't have anything which is specified over there. So wherever you are coming across such ticklish problems, ensure that you start mentioning that in your certification format. Because certification is something wherein you are assuring the reader or assuring the compiler, that is a central auditor, that you have already verified all those things. So whatever work you have done, it's better that you write down that work which is done. Like say agriculture advances also, there are a number of instances wherein once it crosses certain limit, it becomes out of priority sector lending. So in one quarter it can exceed, second quarter it can be within that limit. Go through the process which bank is following, ask the question to the bank. If you find that there is no such process, there is no system generated report which is available, better to say that it is manually done. So naturally you are disclaiming that. So that's what I will always restrict my responsibility.
Sir, but many a time certificates format is pre-generated or pre-filled or something like that. In that case, and with so many copies to be made of the certificates,
Yeah.
Do you think we should just add down the line manually in that certificates?
Actually, I will tell you what we are doing. See, typically in most of the banks now, all returns and certificates are web-based. And in certain banks, even the digital signature gets attached to that. At the same time, no one has barred you from issuing manual certificates. So ideally, suppose say there are 25 certificates are there, you can prepare a covering letter kind of a thing, not letter actually, in the format which is illustrative format which is there in our guidance note. Make use of that and then say that this 1 to 21 certificate and give that scope, that you are appointed as a central, as a statutory auditor, what kind of work you have done. So for maybe all 20 certificates, you can give it in a tabular form by saying that what kind of work is performed. Or you can issue a separate covering letter for each and every
So
certificate.
that's why I was just trying to add here that I have an idea. You tell me whether it works or not. What if I just say as per our report of event date?
There is no scope
Then
for
that-
writing anything.
So when we are signing it,
No, there is no manual.
Okay.
No scope for manual addition is there. So that certificate which is digitally signed, that becomes your annexure to your main certificate. So that is not your real certificate, but only thing is that ensure that you are sending this certificate manually to the central auditor also, and you are taking an acknowledgement that the branch manager has received it, so that he ensures that it is passed on to the zonal office. Because right now what is happening is in web-based returns, there is a limited scope for comment. And ultimately auditee cannot decide how many words or characters you are writing. It's your prerogative, it's your product. So you can always issue in manual format. There is no barring on that. Whether it is certificate or LFAR or audit report, same thing applies everywhere.
Now LFAR will is also online, right, from this
Some
year?
banks are having online
Yeah.
LFAR, but there also, if the the required space is not there, you can always add as an addendum. Write in the remark column that refer to the manual annexure which you have issued and get it acknowledged. That is sufficient.
And how about Ghosh Dilani?
Same thing. See, Goshilani, if it is
Okay.
having only yes, no, not applicable, and you are having some comments to add, give a covering letter.
Okay.
Give a negative assurance by saying that during your audit, period, these are the observations. See, because Goshilani expects that you have to comment on 365 days, because there are certain practices which they are, which have been asked. So restrict yourself, give a negative disclaimer or a negative assurance by saying that nothing has come to your notice and the other wordings. Don't just sign off what the bank has prepared as a format and fill up that format yourself, and don't ask the branch manager to fill it up. Like, it's like suppose someone is testing you, you will always say positive remarks, about you. So that is something which is not expected.
Thank you. Anand sir, you want to add something about Ghosh Dilani or anything in
no,
particular related to
Just
certificates?
one, he has already mentioned that, of course, you can issue manual certificates, but you just need to ensure 110% that it is delivered to the statutory central auditors, the branch manager, and the zonal office. Because if it is not, and you don't have an acknowledgement for that, that paper is useless. Because what will go on the system will be taken as final, and if that manual paper doesn't reach the statutory central auditors and the zonal office, then that paper is useless. So that needs to be really ensured, is what I feel.
Just one thing I will like to add, not really exactly related to that. From current year, when you are generating UDIN, there is a data of MOC which is getting collected. So just keep this thing in mind. That is, you can say, attempt from institute side to collect the data about how many mistakes are occurring in banking. Without that MOC, without those details which are filled up, UDIN will not be getting generated. So always ensure that MOCs and those details are in sync with each other. It's only a quantification actually. It has nothing to do with customer or bank also per se. But that is an addition for the current year which was not there in the last year. For last 2 years, institute has been asking in MEF and other details. I don't know whether how many of you have really filled up those details. So maybe the data is inadequate. So now the data will gradually start getting collected. But still I am having certain challenges in that. So I just thought that I will be a little vocal
Yes,
on that.
very valid point, sir.
See, what really happens is, as far as the structure of commercial banks and cooperative banks are concerned, in commercial banks, there is a concept of branch audit, at least in public sector banks and few private sector banks. At times, it might happen that the MOCs which are there in public sector bank, all of us are aware about. But when you are a single auditor, maybe in a cooperative bank, MOCs are something which you need to insist upon the bank that you are going to change the financial statements only by way of MOCs. There is an unnatural practice which happens that the earlier day begin is done or day is opened and those entries are passed. That is something which is not expected. I don't expect this in public sector bank, but at the same time, when you are generating UDIN for cooperative banks also, you need to be very vigilant about quantification of MOCs which you are supposed to give. Giving quantification of MOC doesn't mean that you are qualifying a report, because bank has accepted the MOCs, financial statements are true and fair, so there is no question about that. But don't presume that since it is incorporated, there is no MOC is a wrong presumption. There will be always a comparison between system generated trial balance on that date and a financial statement. The reconciliation is your MOC. So that's what you need to capture. For branch auditor, it is easier, but for a single statutory auditor of a bank, you need to keep this thing in mind. So I just thought to add that, even though it was a deviation.
Yes, definitely. Sir, it will also form part of our documentation and working papers for future reference also. Coming to the more practical aspects of actually hands-on audit, would you like to add something about how to do cash verification? Because many a times, see, I know that it might sound that it is a very, general area of cash verification, but there are problems that are witnessed by people. See, one of the senior ex-bankers who was working with us for a long 25 years, he used to say, who taught me bank audit, he said that at the time of cash verification, never leave the cashier alone. Don't, under any pretext, don't let him move out of the cash cabin. First, you get the cash verification completed and then only. So can you tell us something about how, what about cash in hand, cash in ATM, vault cash? Are there certain issues which you feel that needs to be highlighted or taken care of while doing the audit? Because even in cash in ATM, the ATM process is usually, many a times it is outsourced. So should we believe in those reports? Should we check the ATM, ask the ATM person to come? Then there are differences also in ATM. How do we handle all these things?
See, a very valid point as far as cash counting is concerned. We have to see their internal communications with respect to every branch is reporting monthly report of counterfeit notes, soiled notes, fake currency note, etc. Just check that report which is sent to head office every month, because that also aspect needs to be seen. Because sometimes what happens is that some branches are encouraging some customers to deposit sort of torn, soiled notes and say that we'll take care of it. It might be a big business also. I'm not accusing anyone, but we'll need to carefully have a look at those reports. And if the quantum of soiled notes every month is increasing or piling up, that is a matter which needs to be, it raises our eyebrows. That's what.
Generally now in nationalized banks, I feel that the system of cash is quite streamlined with 2-3 checkers, and every day the counting is signed off by everybody. So that way, I will say it is a low risk factor, and plus there is insurance, plus vault management is outsourced, ATM management is outsourced. Then you can take logs from the ATM machine as to what all the transactions were there and what was the balance, and it calculates the difference. So though it is low risk, I will not say don't look at it, but you can get a good assurance from the verification of the through the system as well as the manual cash check. What I feel.
Just add. Actually, I will just repeat what I said, during my presentation. See, whenever you are issuing a cash verification certificate, you are giving an assurance that cash exists, and almost all of us don't verify the cash. Forget about what kind of controls the banks are having. You need to ensure that the cash is verified to the fullest extent. I know that none of us are doing that, or maybe few of us are doing that. I'll tell you the reason why I'm saying that. It's easy to disclaim later on by saying that I had done 100% verification. That is something which is to protect ourselves, that the cash existed on that particular time and date, and you can always say that that was the case. Just imagine a scenario wherein CCTV is capturing what kind of work you are doing, wherein you are just verifying one bundle and saying that everything is verified, and tomorrow something goes wrong, wherein it is proved beyond doubt that there was a shortfall in that particular, say, currency chest, or maybe a vault actually, which is there in the branch or with the cashier. Having said that, at the same time, you need to be always having a professional skepticism of not relying on any of the systems of the bank. In the sense, it is a presumption that everything is working fine, but that presumption will be true only when you test it. So you need to test it. Going a step further, if you want to be really critical, you need to carry out the cash verification in between the working hours and not at the end of the day. Because if there is a teaming and leading which is going on at a particular branch, you will be never able to find it out. For a statutory auditor, it becomes a little tricky job. For concurrent, it's comparatively easier because you are there for almost entire year. But at least as a statutory auditor, better to verify that. I will tell you the reasons why differences might be there. Normal cash, usually differences are not supposed to be there, but as far as ATM transactions or ATM cash is concerned, differences are bound to happen for various reasons. Like suppose the cash is not dispensed. So that's a typical case. Another thing is that whenever the ATM machines are loaded with the cash, ATM machines are not capable to count the cash in the sense of denomination unless and until it's a combined machine wherein the cash acceptance is also there and where the cash can be dispensed of also. In many banks, such machines have been already started off where the cash can be verified. But when the ATM is loaded, cash is not really verified. So the currency note which is loaded is of 2000 rupees or 100 rupees that ATM machine cannot decide. So there might be n number of instances. So don't presume that everything will be always in sync with each other. At the same time, always refer to the circular of Master Circular on fraud, wherein if there is a cash shortage, which is found out by the cashier and by the external agency, there are limits which are predefined. So if you come across a case wherein say ATM cash difference is there, which is say 25,000 and it is going on for say last 3 months, irrespective of the reason of that or irrespective of reconciliation or whatever is the reason, that is required to be reported as fraud. So be vigilant about that cash. And another thing is that many banks insist on carrying out a cash verification at a particular time. It doesn't make any sense actually, because ATM cash conclusion is only at the cutoff time, which is typically 11:30, which was there for ATM cutoff, that is end of the day process. Otherwise, it's very difficult to pinpoint that what was the exact cash on that point, unless and until next day scroll is taken and that time-wise you are able to correlate that with the GL. But cash verification, even though it appears to be a simple exercise, be vigilant about that, because later on what is happening in that branch is something which is not known to you. So be careful about that. And you are having your staff articles who will be very happy to keep on counting the cash, because that's something which is for first year article, it's a kind of a privilege. You get to handle the cash. So let them enjoy that. Your work will be ultimately done.
I do agree that let them enjoy, but let them not be excited. Because that I never handled in my lifetime crores of rupees. And now I'm here, I'm seeing crores of rupees. So naturally the tendency is to get excited. So whenever you go for checking of the cash, definitely there should not be any excitement. Let the other staff also be aware of this excitement aspect. One brilliant idea was taught to me by one of the SBI officials, and I found it very beautiful, and it is taking very less time of ours, and it is very easy to follow. What that particular guy taught me, and I already implemented this idea in several bank audits, and it is successful. Suppose if that particular cash chest is given to you, chest means I am not speaking about chest in the RBI manner or RBI fashion, but say that particular tijori is given to you for checking. Definitely what she has said that it must be in the presence of the cashier, no doubt about it. But we need not go for checking all the bundles and all these things. What I taught from that SBI guy, he took out some notes from that particular sector. He took out some notes from the cash in hand. He took out some notes from another sector. And he put everything in one plastic bag. That plastic bag was sealed. Sealed means not in a fashion of say lock and all these things, but it was stapled in the same normal fashion. It was kept in the tijori, and then the cashier was asked to tell me what is I have kept in that particular plastic bag, which is not known to me also, not known to the cashier also. So if these type of things, these are the practical tactics, and if at all you go for all these things, probably our time would be saved, and if the answer is correct one, then hardly some cash is to be counted. Entire work would be done by the professionals who are handling this cash years together. So that will ease out our job.
कम टाइम में ज़्यादा काम.
Sir, I will like just to add one thing. If the cashier is aware that the cash is short by 5 lakh, he will always say that that is the balance. So there is a risk which is involved in that. Because he is already aware, or if it is a team and leading, he will ensure that the cash is received back to him. So this will definitely save the work, but still, there is a possibility which might continue. You cannot eliminate that portion.
documentary check, I'm just suggesting, in case of cash, always verify the key movement register, because cash is expected to be with the joint custody, and whenever there are changes in the job rotation, etc., those entries has to be reflected nowadays in the manual register as well as in CBS system. Those entries should be verified, and plus, as far as cash deposits to other branches or cash coming from other branches is concerned, always verify that the entries are mentioned in the cash in transit register, plus nowadays RBI has mandated to mention even the vehicle number in the CBS system. Do verify that also.
Sir, I think now we are moving towards non-financial aspects, just like as you mentioned about CCTV. Sir, there are frauds happening where CCTV recording is, we can see, but it is not getting recorded. The camera is capturing things but not recording it. So such type of non-financial indicators, should we be putting it in our report? No need, right? Because it is concurrent auditor's job. But it definitely aspects the, it covers the risk aspects, because something like alarms, maybe alarm working or not, these key registers, and all such non-financial aspects, I am saying, whether it really is a part of our statutory audit process.
I think this is covered mostly in the systems audit, IS audit, which is done by every branch. I think, I don't remember the frequency, but it is once in every year, I think, for every branch. So IS audit should ideally cover all these aspects, including the security part, and risk-based audit will also cover, but specifically, as you mentioned about CCTVs and these things, this will be covered in the systems audit, IS audits, and that report you definitely can review.
But as far as ATM transactions are concerned, I am advising you, at least on few sample days, just ensure that the JPG rolls are getting printed. That is, it has got value in Evidence Act.
So what I wanted to say about this is that statutory auditor, we need to consider this other reports as well. So do we need to highlight this in our report? That is what I am asking. In LFAR and all this
This is not
thing.
in our scope of work.
Okay.
So it's outside that. Means if just as a matter of, you can say, curiosity or academic interest one can do, it's definitely not in our scope. And it doesn't affect, it's not part of IFC or also. It's not, there is no internal financial control which is affecting your financial statements. So that need not be seen.
Answer to your earlier question, not to this one. See, the internal control mechanism is to be checked by the auditors. So whatever non-financial aspects are concerned, and if at all they are impacting on the internal control, then definitely it is our scope. And we have to report on it.
I have got a question. As far as, of course, it's a non-financial matter, it will not affect true and fair. But in case of operations to the locker, RBI mandates that the moment a locker is operated, the SMS should go to the locker operator. Now, for that purpose, the system should be in place. Is it in our domain that we report that there is a violation of RBI circular, because a person who allows the locker operation, fact remains that he is not making entry of that in CBS. Are we at liberty to mention this in the LFAR somewhere? I'm just academic, my own query.
I will just answer this. Nowhere RBI is asking, or the bank is asking us to say that bank is RBI compliant. Secondly, RBI circulars are not mandatory on auditors, except IRAC circular, wherein there is a joint responsibility. So that is for the bank to comply. If the bank is not complying for whatever reasons, auditors are never held responsible, unless and until that is part of your scope. So suppose in concurrent audit, if it is made as a part of your scope, naturally you need to test it. Statutory auditor, we are not certifying RBI circular compliance, because then why to restrict only to locker? Yeah.
It will be even difficult to find out what all circulars are there.
Sir,
First exercise.
Yeah. I wanted to ask about this, that say just about willful defaulters list, when we were saying that willful defaulters, there are certain guidelines, and now the bankers are not, may or may not be following it, but that affects our even the provisioning. So in that case, how do we safeguard ourselves about this?
See, one is that at any level, branch, head office, zonal, willful defaulter list are invariably available. Means you can ask the bank to give a defaulter list. Even in RBI website also you can pull it out. But easy to ask the bank. If during your audit process, if you come across a scenario wherein willful defaulters criteria are getting fulfilled, but the bank has not marked that account as willful defaulter, you can definitely raise that. Our risk is limited only to that extent. Because we are not in a position to assess each and every NPA account and say that whether it is a willful defaulter or not. So on a random basis, you can do that. And practically willful defaulters, there are criteria which are predefined. You need to ask the bank how that process is carried out. If the bank says process is not there, you disclaim in the report that the system is not working. Let the branch manager explain you that. And again, we don't have to go to zonal manager and anyone because he is the person who is running the branch. He should respond to you. But typically in most of the banks, there is a delay in marking accounts as willful defaulter. But we need to prove beyond doubt that they were willful defaulter. So taking onus of that is little ticklish, and no one has asked to certify us that every willful defaulter is marked. So till the time RBI doesn't come out with such certification, we are saved.
Okay. Sir, coming to the loaning and monitoring, supervision, credit appraisal, that part of LFAR, we have already discussed about various reports like concurrent report and this inspection reports. But what about things like visit reports and, cases where their snap audit is there, credit audit is there as far as loans are concerned? Then in such a situation, how there are so many reports available. So, and also in LFAR, there is a question about what all reports you are considered. Now, how to handle that particular question in the sense that do we take out the adverse comments? Say, for example, in stock audit reports, just for the information of audience, we were just discussing about stock audit reports where they are stating in stock audit reports that the stock was not available, or case there are problems in stock verification or valuation. Such type of comments are there in various reports. In that situation, how do we handle this particular question of LFAR and as well as monitoring question in the LFAR related to loans?
See, as far as the LFAR point is concerned, we need to take a representation from the branch actually as to which reports are available at the branch. And we need to restrict at that point itself. Because if the branch is not giving you any report, it is their responsibility. So that is first thing. If you come across any adversities, like, stock auditor is stating that DP is wrong or stock is inexistent, one option to deal with that is, if by way of stock audit report, if it is proved that stock statements are fictitious, it's a fraud. So that area is already covered. Apart from that, early warning signal circular is there, which you can use and mention it in the LFAR, because now the revised LFAR includes that early warning signal criteria also as to whether the bank is having that process or not. And based on that, the other ramifications are there. Maybe account might be red flag, or depending upon the criteria of early warning signals. So again, coming back to the query, if the stock auditor has disclaimed your drawing power, you can always get into a mode of marking that account as NPA. Ask the branch manager to defend themselves. If they are able to do that, it's fine. But otherwise, you can always take help of stock audit report and do that.
So stock audit reports, many people say that, oh, okay, at that time the stock wasn't there, but the manager says, I can assure you that there is stock. So how do we do this then?
No,
Should we ask him to do a visit report?
Not at all. That is his representation. You did not have to agree with him.
Okay.
Let him disagree with your MOC. It doesn't matter. Let him give that in writing by saying that at that point of time, the stock was not there. Only one question which one can ask is, if that is the case, have you reported this as a fraud?
Right.
Because as per the master circular, this is a fraud wherein fictitious stock statements are submitted. That will probably resolve the issue, because usually then no one argues, and reporting of fraud is not that straight. So suppose I am a banker and if I am given a choice to mark an account as NPA and fraud, even though he's sitting beside me, I'm not hinting anything on that. But that's a typical mentality, because reporting of fraud requires a lot of other ramifications also. It has certain procedure to be followed. Even though fictitious stock statement is a fraud, I have never seen any bank getting into a mode of marking such accounts as fraud accounts. So banker will always choose to go with NPA marking, rather than going there. So that's how one can balance.
Okay. So anything to add about this, especially related to DP calculations and all? It is related with the systems part again of the case. And there are so many unusual cases in calculations of DP. Sometimes even I've seen that creditor's margin is deducted or something like that. And it directly affects the system classification of cascade accounts. So do you think as a blanket here, we are all chartered accountants, so can we say this, that we can disclaim about the system generation of NPA, because it will affect, there are other non-financial aspects again to this, saying, I have seen a case, I think in one of your case studies also, that vehicle loan is there, but the vehicle has been now stolen. In such case, this type of things are do not get captured in the system, then how will the system generate proper NPAs? So in such cases, as a blanket study, I am saying, do we check for such type of queries and disclaim our responsibility as far as NPA system generation is concerned?
Actually, I already covered that aspect, but I will just reiterate.
Okay, if you will have,
See, you need to give an example to disclaim anything. So you can have a scope limitation, wherein you can say that you are giving a limited assurance and not really you can say a complete assurance. So that is one way to look at that. But if you are not able to substantiate your disclaimer, it's difficult to say that it's not there. But there are ways and means to find out the lacunas. The best way is that go para-wise and see that whether that IRAC is really working or not. And there are a number of things. RBI is innovative. CBS vendors are not that adaptive. So, the manual intervention is bound to happen, but September 20 circular is the one which gives insight about that. Or rather, I should say, insight is there, how to disclaim that also. Just to give an example, they are mandating the auditors or the banks to give test environment available with the auditor. No CBS vendor is ready to give that. That is a hard fact. So, to that extent, you can always have a scope limitation.
okay. Because RBI is in its annexure 2 is saying that we need to certify the transactions. So definitely it means that all the transactions, whatever happening in the bank would be.
But I will tell you an unfortunate
Yeah.
part. I won't name any sector or section of banks, but I have seen almost all the auditors issuing that certificate as a clean certificate. I don't know the reason, but that's the reality. Maybe they haven't gone into nitty-gritties of that and how the RBI will react on that. Because once you issue the certificate, if there is a single diversion which is pointed out by the RBI, your certificate is wrong. And then series of incidences will start off from that. So better to be careful about that.
That certificate, I feel it is very critical. It is being asked very casually to be given. But what you should do is that every aspect of the master circular, you should draw out a sample for every aspect of that master circular and check whether system is performing the job for that particular. And I personally feel that the sample which you are drawn for every type should also be annexed to your certificate. And the certificate should not be just a simple certificate. It should be specific to what all norms you have checked, wherever, whatever specifically you have checked. And if you find any sort of problem in any place, we should mention that specifically. So that exercise is, though it is called a certificate, I think it is more of a report than the certificate.
Yes. Before we go to the concluding question, whether any questions are there in the audience, we can take them up.
Just sir, physical verification, whether we have to do all physical verification of all securities which lying in the bank.
You mean to say original documents?
Original, we have to see all the physical documents are there or not. We have to see all the security which bank is having. Suppose housing loan, all the mortgage, whether documents are there or not, whether we have to see.
You have to restrict only to the extent of loans which are picked up for your sample.
No, sir. Actually, I have seen when I have verified. So I have seen one mortgage loan. Branch manager given the document. Even the loan was there, but document has been given to the person. He has taken for some purpose. He told, I will come back and give this one. And that was not returned. So that is without security.
DG Locker are you referring to?
This one, second, I have verified the gold loan. Suppose gold packets, one sort of the gold packet was there. The packet was not there. If we will, sample-wise if we will search, then this will not be found out.
Yeah, I will answer both your queries. First query, if you have come across a scenario wherein document is missing or it was given, either way.
So when we have searched all the document, then I found out.
No,
na,
but that
otherwise
is,
how I
that is,
found
that
out.
is not part of your scope. RBI is not asking you to carry out 100% audit. So it's,
But physical security
No.
bank is having
No, no, if-
that, so we should cover.
no, no,
na.
if, no, no, if you wish to carry that, no one has stopped you from doing that. But then just think about, say, any reasonably medium branch, wherein say 10,000 or say 50,000 loans are there. It is not expected from statutory auditor to verify each and every documentation. The reason being, we are not doing document audit, we are doing statutory audit. That is first thing. Secondly, if you come across a case, you can always refer it as a fraud case, because that's where the master circular will come into play, wherein that particular original document was given to that particular borrower, which was not supposed to be done. So that will be a fraud case, not only a NP account. Thirdly, as far as gold loans are concerned, you are supposed to count the gold packets which are there. You are not supposed to open that.
No, open nahi, counting. I am
So
telling
counting
just
is
counting.
counting is very much in your scope. And another very vital point is, there is no scope restriction on statutory auditor. The restriction is only when you close the statutory audit. So there is no area that which you cannot do. Suppose you want to verify all day voucher bundles also for all 365 days.
No, that is not possible. That's not possible.
Sir, same way. So it's up to you which kind of sample and scope of work which you are defining. There is no barring or scope limitation is there.
And practically, sir, what you are saying, probably in a case where there are only maybe 50, 100 loans,
Yeah.
you are referring to such kind of where it might be possible to verify all the loans.
Yeah.
Now, sir was saying, like, there are some branches which will have 10,000, 15,000 loans.
That's not possible. That's
It's not possible, right?
That's not
So
possible.
what is possible is taking a correct sample, making a strata of the loans, taking a correct sample and checking them and giving your assurance on that basis. Because practically, if you go to a little bit larger branch, which has say 400, 500 crores of loans, it will be impossible to check everything. So you have to rely on the sample. There is no other choice.
Okay, thanks.
You mentioned about risk-based internal audit, RBIA. Is it undertaken in all banks, in all commercial banks, and by whom?
RBIA, you are saying?
Yeah.
Risk-based internal audit is existent in commercial banks since 2002.
Yeah, but the RBI inspection is also there, and that are two different audits, no? RBI inspection.
RBI inspection is of course there. Now the focus of RBI is more on risk-based audit only. So they are mainly doing the inspection on the base of the risk-based audit. Inspection itself is more done by RBI. I don't think there are, especially in commercial nationalized banks, the frequency of other aspects being checked. They are in a way putting more stress on RBI, risk-based internal audit. So both will be done, regular inspection, and there will also be a RBI check by the RBI.
Both are done by RBI officials. sir?
Yes. There is a separate wing of RBI team. Inspectors are being trained separately for RBI, I believe.
Okay.
No, what you said is that RBI is doing RBIA, but I got it.
Yeah.
No, it is not the case. Risk-based internal audit is entirely different from RBI inspection. Risk-based internal audit, that is what called as RBIA,
Right.
is to be done by the bank itself internally, and it is not to be outsourced at all.
Okay.
So
that
they
was
are totally
that
different
was my
things.
exact query.
हाँ.
No, verification of that.
It is done by
and
whom?
RBI inspection
That
is
was my
totally
question.
different. RBIA is totally different.
Okay, got it.
But the base of RBI inspection is mostly on RBIA.
That's what I was trying to tell. That
Okay.
it is, though it is an internal exercise, it is verified by the RBI.
Okay.
See, the RBI inspection is the inspection by the regulator, which is external, apex body. And the risk-based internal inspection is entirely in-house, and it has been considered as a core activity which cannot be outsourced. And this activity, the overall person in charge of that is called as a HIA, Head of Internal Audit. He separately reports to a very highest authority, even Audit Committee of Board. So he is not otherwise answerable and engaged into day-to-day function. As far as RBI inspection outcome is concerned, they assess the net worth with reference to the net worth carried out by statutory auditor, and there is some divergence. But as far as the purpose of the internal audit is concerned, risk-based internal audit is concerned, it is to assess various types of risks, say operational risk, legal risk, documentational risk, employee risk, etc., and which is to be addressed by the banking own staff.
In Bank of Maharashtra, this risk-based internal audit is given to concurrent auditors only.
No, no,
There is
no,
one-
no,
There is
no.
one part in it, in concurrent audit report, risk-based audit.
They must have included that, but it cannot be outsourced per se.
Okay.
It cannot be outsourced. As far as RBI inspection report is concerned, finally they will come out with the list of instances and the risk mitigation plan. As far as internal inspection by bank own staff is concerned, they will try to ensure that more and more branches fall into the very marginal risk category, and depending upon the risk classification, they will increase the frequency. If it is the high risk branch, they will increase the frequency of internal inspection, but per se they are altogether different than each other.
Sir, valuation of the immovable property not done exceeding three years in case of NPA accounts, definitely it will go to the NPA, loss asset. But whether it is essential in other, without NPA cases also, 3 years?
So non-valuation doesn't amount to a loss asset as such, and this criteria is only for NPAs above 5 crores. For others, it is discretionary. In the sense, bank has to have a policy.
It is above 5 crores, but this
Above,
is
if
not-
it is above 5 crores and account is NPA, then only there is a mandatory norm for valuation once in 3 years. For others, it is not mandatory.
But I have not seen, sir, this
It's
above
there in
5.
master circular itself.
Oh.
Master circular on IRAC norms.
Okay.
So we will conclude today's panel discussion. If at all any last closing remarks, if all of you want to give, stressing any particular area which one should not miss, or any point that one should remember while carrying out the bank branch audit, maybe that can be the last concluding point.
I will just like to say one thing, that generally what happens is that in a branch audit, the auditors tend to look at the advances and more focuses on advances, and in such cases they lose the sight of the other tasks that need to be done. Now the other tasks could also have a great financial impact on the balance sheet. So like physical asset verification is there, or many other aspects are there. So though I agree that maybe 70-80% of the stress should be on the advances, but the other parts should not be left alone. They should be equally taken care of and reported properly, because it will also safeguard your interest in the future if anything goes wrong.
I would just like to put it in a little lighter vein. Whatever all of us are agreeing to do at the time of bank audit, even if we do that, maybe say half of that also, the quality of audit can be easily maintained. Don't shy away from admitting that there was something wrong with us, maybe in earlier audit period or something of that sort. There is, no one is going to catch hold of you. But whatever, all of us are discussing typically at the bank audit seminars, we need to adopt that in real life, and we should ensure that that gets implemented. Then only, we can say that there is a justification for the audit also, and our profession also, to be specific. There is nothing beyond that actually which one has to really ensure.
Ratio analysis. If we consider that ratio analysis as one of the tools of audit, then probably so much insight would be available to you within short span of time. And therefore, this ratio analysis as a tool of audit, we must develop that practice also. Then it will give some altogether different result to your audit work.
Kiran sir.
I mean, while concluding, I'm coming back to the topic of my presentation. What I mentioned was that finally we have to certify, we have to write in LFR about data integrity. Whatever is needed to enable yourself to form an opinion that yes, the data integrity is maintained, do whatever you want to do. Thank you.
Thank you so much, all of you, for such a insightful discussion for me also, because sometimes we do happen to overstep our work, or sometimes we neglect certain things. As you rightly said that yes, it is not only loans and deposits which we want to certify, but there is trial balance sheet and profit and loss account as well, which also needs equal trust while we are carrying out the audit. Yes, so thank you so much. Here we conclude our panel discussion and the bank branch seminar. So thank you very much, all of you.
One pointer from you. Do you want to add something? Your concluding remark?
No, my concluding remark is that let us really give justice to the bank branch audit assignment that which we really have. We all are definitely passionate about bank audit, yes, but try and think about what kind of value addition which we will give, and how, even though we are a bank branch auditor, but RBI is looking at us. Okay, and what our performance is will definitely reflect upon all our fraternity. So let us give justice to the bank branch, however small the branch might be. Let us give justice to our assignment. That's what.
Thank you so much. With this note, I really thank you all on behalf of all the organizing team. I thank Kunte sir, Mate sir, Dhananjay Gokhale sir, and Anand Joshi sir. Ruta, I won't thank you. You are a member of the organizing team. All the participants, including the past leadership of Pune branch. I also recognize the presence of CA Dheeraj Kasat, who has graced the occasion today. He is chairperson of Satara branch. And the entire Pune branch office staff team. They have really worked very hard to make this two-day session a successful one. So on this note, I take this opportunity to thank all the panelists, all the participants on behalf of the entire organizing team here at Pune branch. On this note, I request you all to please rise for the national anthem and then we conclude. Thank you.
पंजाब सिंधु गुजरात मराठा द्राविड़ उत्कल गंगा विंध्य हिमाचल यमुना गंगा उच्छल जलधि तरंगा तब शुभ नामे जागे तब शुभ आशीष मांगे गाहे तब जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता